Is the audio video clear? Okay. Shall we start? Today I'll be sending to you the combined notes, okay? Of yesterday's and today's both. Okay. Okay. Today we'll be doing another two sections of section A, corporate governance and professional ethics. These two chapters will be covering in the beginning because yesterday we completed subsequent events and going concern. Today we'll be covering these two topics now. So, what do you mean by corporate governance? What is corporate governance? How a company is operated and controlled. This is corporate governance. How a company will be controlled and managed and operated. What is the aim of corporate governance? Is to safeguard the interest of the stakeholders. What is the aim? To safeguard the interest of the stakeholders. Advance, see, this all you have to just understand. No need to learn anything. Just understand the concepts and move on. Advantages of good corporate governance guidelines. Fairness, matlab equal, transparency, accountability, efficiency of operations, better risk management, less mismanagement. All this, if there is a good corporate governance, all these are the advantages. Next, corporate governance principles by OECD. What do you mean by OECD? Organization for Economic Cooperation and Development. Corporate governance principles by OECD, Organization for Economic Cooperation and Development. Just know 6 points. They'll not ask you this question, but then yes, at least you can write in your own words, study in that format. Ensuring the basis of an effective corporate governance framework, ensure rights and equitable treatment of shareholders and key ownership functions, improve the governance of risk management, ensure the strategic guidance of the company, ensure the timely and accurate disclosure, ensure effective monitoring of management by the board. Now, coming to important points. Understand these meanings so that the further other notes will be able to understand properly. You have to understand the proper meaning of what is executive directors, what are non-executive directors, who are independent non-executive directors. Okay. Now, first of all, what are board of directors? Governing body of a company. Who are board of directors? Governing body of a company. And board of directors are elected by the shareholders in case of public companies. Why are they elected? To set strategy and oversee management. Next, what do you mean by executive directors? They are members of the board of directors. They are members of the board of directors and they are responsible for running the company on a day-to-day basis. They are responsible for running the company on a day-to-day basis. Who are non-executive directors? They are also member of board of directors, but they are not responsible for the daily operations of the company. That's the reason they are called as non-executive directors. They act as director. They act as advisors. Okay. They are not responsible. And executive directors, they are responsible for the company's operations, day-to-day operations. Now, what do you mean by independent non-executive directors? We studied executive directors, then we studied non-executive directors. Now we are studying what do you mean by independent non-executive directors. Independent means does not have a material relationship with a company. They should not have a material relationship with a company. Neither part of its executive team nor involved in the day-to-day operations. Since it is a non-executive director, they should not be involved in the day-to-day activities. And since they are independent, they should not have any material relationship with the company also. Understood the meaning? Executive, they are responsible for running the company on the day-to-day basis. Non-executive, they are also members, but they act as advisors. They are not responsible for the daily operations of the company. Independent non-executive directors, be very careful. You should know this meaning because everywhere we'll be using this now. Independent non-executive directors means does not have a material relationship with the company and they are not involved in the day-to-day operations of the company. Now let's start. Independence can be compromised. Independence for a non-executive directors can be compromised by the following. So independence will be hampered. Independence will be compromised if these things happen. What are these things? For objective type, very important it is. You have to know all these dates, all these years, timelines. Okay. Employment with the company or in the group in the last 5 years means if a person is in the employment of the company for the last 5 years, any of the 5 years, he cannot be called as an independent non-executive director. He will not be eligible for that post. Next, first point was about employment. Second point is about material business relationship with the company within the last 3 years. 5 years, employee nahi hona chahiye. 3 years, there should not be any business relationship. Next, remuneration beyond the basic fees agreed for the role. Other than fees for non-executive role, other than that, he should not receive any other fees. For example, in the case scenario, if they tell that after the retirement, he is getting some pension. He's getting some pension. That means he is getting any other fees other than non-executive role ke liye. Then he is not an independent non-executive director. He should not get anything other than his basic fee for non-executive purpose for his role. Next, close family ties with any of the company's advisors, directors, or senior employees. There should not be any family tie-ups. Representing a significant shareholder. If he is representing as a significant shareholder, cannot be an independent non-executive director because independence will be hampered. It will be compromised. Serving longer. Okay, this is very important. Serving longer than 9 years on the board. How many years? 9 years on the board means he is of the part of that non-executive directors for 9 years. For board of directors, he is in the board of directors for how many years? 9 years. He has served for 9 years. Then he is not eligible for becoming independent non-executive directors. Three main things you have to remember is for the last 5 years, he is not employee. For the last 3 years, he doesn't have any business relationship. And for the last 9 years, he is serving as a member of the board. Next. What do you mean by chair? Chair means chairman. Okay, the chairperson. A chair is elected by a company's board of directors. Who elects the chair? Company's board of directors elect the chair. And what is chair responsible for? They are responsible for presiding over board meetings. Whatever board meetings are there, they'll be presiding over it. A chair often sets the agenda. They set the agenda and has significant ways as to how the board should vote. They will decide how the board should vote. Now, very important point. The CEO runs the company, correct? Who is CEO? Who is Chief Executive Officer? Head of Executive Directors. Who is CEO? Head of Executive Directors. You don't have to know anything if you just understand what it is. You don't have to by heart anything. CEOs are often responsible for expanding the company, driving profitability, and in case of public companies, improving share prices. CEOs manage the overall operations of a company. CEOs manage the overall operations of the company. Now, the CEO runs the company and is the person that company executives report to. The executives report to CEOs. But since the CEO is appointed by the board, CEO is also appointed by the board, the chair can influence who will be chosen as CEO. Correct? So the conclusion is chairperson and CEO cannot be same persons. CEO and chairperson cannot be same person. In MCQs, they can ask you. Chair should be independent on appointment. So the chairperson also should be independent. Again, the independent, same points what we studied here, no? Same points applicable. The chair is a different position than that of the CEO and can be either a non-executive or executive position. So chairperson can be either executive or non-executive position. Next, these notes are the crux for corporate governance. Okay, very important, these notes. Each and every point is very important. If you understand these points, 80% of corporate governance is done. So let's start. Okay, let us focus. Okay, let's start one by one. Okay, very important points. Learn this now only, along with the revision. The chair and the chief executive should not be taken by the same individual. Already we just discussed, right? The chairperson and the chief executive, the CEO, cannot be the same person. Next, very important. At least half the board. Matlab, more than 50%. At least half. At least half the board excluding the chair. Matlab, these are board members. There is a chairman, exclude chairman and the other members of the board. At least more than half should be independent non-executive directors. We just studied the meaning, right? Independent non-executive directors. So the board of directors contains, right? Out of that, exclude the chairperson. Excluding the chairperson, whoever the remaining board of whoever are the members, out of those, half or at least half of the members should be independent non-executive directors. Next, in nomination committee, majority of the members should be independent non-executive directors. Again, board of directors, at least half, correct? At least half. Nomination committee, majority should be non-executive directors. Till now, crux was this. Next, chair should not be a member of the nomination committee when the committee is dealing with the appointment of the successor. So in the nomination committee, chair can't be a member. Correct? He can't be a member. Till now, how much we have studied? Chief person and the CEO cannot be the same person. Out in the board, excluding the chiefs, at least half of the members should be independent non-executive directors. Nomination committee, majority of the members should be independent non-executive directors. Next, last what we studied was the chair cannot be the member of the nomination committee. Done. Next, chair should not remain in post for more than 9 years from the date of their first appointment. What it says, the chair should not remain in the post for more than 9 years from the date of the first appointment. Once the chairperson is appointed for more than 9 years, up to 9 years he can be appointed continuously, but for more than 9 years he is not allowed. So chair should not remain in post for more than 9 years from the date of their first appointment. Next, the board should establish an audit committee of independent non-executive directors with a minimum membership of 3, or in case of smaller companies, 2. That means in audit committee, at least 3 members should be independent non-executive directors. And if there is a smaller company, 2 members chalega. Done. Next, the chair of the board should not be a member of the audit committee. The chair should not be a member of the audit committee. That means crux is the chair. Here also we studied, right? Even in nomination committee, the chair cannot be the member. Same for audit committee also. Even in audit committee, the chair cannot be the member. At least one member of the audit committee must have recent and relevant financial experience. Very important point. At least one member of the audit committee should have relevant and recent financial experience. Next, there are 3 committees, okay? Nomination committee, audit committee, and remuneration committee. We'll be studying the meaning of that later on. Now understand the points. Remuneration committee comprising a minimum of 3 independent non-executive directors should be established. Even in remuneration committee, there should be how many independent non-executive directors? 3, same as audit committee. Correct? Remuneration committee, minimum of 3 independent non-executive directors should be established. Okay, next, very important point. The chair means chair of the board, cannot be the chair of the remuneration committee, but can be a member. Member is allowed, chair is not allowed. If they were independent on appointment, and they should be independent. Crux. The chair of the board, okay, he can't be the For example, remuneration committee. He can't be the chair of remuneration committee. Chair of the board can't be the chair of the remuneration committee. But the chair of the board can be the member of the remuneration committee, but he should be independent on his appointment. Clear? The chair of the board cannot be the chair of the remuneration committee, but he can be the member of the remuneration committee. Condition is he should be independent. Clear? Next, the remuneration committee should determine the policy for executive director remuneration and set remuneration for the chair, executive directors, and senior management. The remuneration of non-executive directors should be determined in accordance with Articles of Association. Okay, what it means? The remuneration committee can fix remuneration for directors, executive directors, and chair, but they cannot fix remuneration for whom? Very important. For non-executive directors. The remuneration of non-executive directors should be determined in accordance with what? Articles of Association. So remember, the remuneration committee can fix the remuneration for everyone else except non-executive directors. Before appointment of chair of remuneration committee, the appointee, whoever is getting appointed, should have served on a remuneration committee for at least 12 months. Nothing but it is telling that the person who is becoming the chair of the remuneration committee, now, the chair of the board cannot be the chair of the remuneration committee. Correct? So now, whoever is appointed as the chair of the remuneration committee, that person should have a minimum experience. That is what they're telling. That is of at least 12 months. He should have served on the remuneration committee. He should have been part of the remuneration committee for at least how many months? 12 months. 1 year, that is. Okay. Next. Independence. Independence is compromised. Just a second. Okay. Independence is compromised if the non-executive directors was employed by the company. Okay, now whatever we have studied already know about the independence compromising, there is only a different language written in this. Okay, so independence is compromised if a non-executive director was employed for less than 5 years, owned shares in the company last 3 years, that is a business relationship, owned shares, or receives remuneration from the company other than a fixed salary for the role of non-executive director, such as pension. I explained you, right? Non-executive directors should get always a fixed salary. It will never be based on performance. You will not get performance-based salary for non-executive directors. Executive directors will be paid based on performance basis, on the skills, on that time, how much time they're giving. But non-executive directors will be paid on basis of fixed salary. Okay, executive directors based on their performances. So whenever in the question they're telling that non-executive director is receiving a pension, that means he is not independent. Independence is being compromised. Crux, remember this much. Last point, all directors must stand for re-election every year. All directors must stand for re-election every year. That means every year all the directors should stand again for re-election. They can be appointed and they might not be appointed, depends, but they all should stand again for re-election. Means every year election happens for director post. Done. Let us just quickly summarize this, because this is the most important part of corporate governance. All these points are very important. Okay, quickly let us just go through it once. The chair and the chief executive, they cannot be same persons, correct? Okay, let me just the chair and the chief executive cannot be the same persons. At least half of the board should be independent non-executive directors. Audit committee, at least 3 members should be independent non-executive directors, and If smaller company, then 2 independent non-executive directors. Remuneration committee also same, at least 3 independent non-executive directors. But for nomination committee, for nomination committee, majority of the members should be independent non-executive directors. Done with this membership. Next, the chair should not remain in post for more than 9 years. Correct? From the first appointment, from the date when he was first appointed. Next, this is done, right? This is done. Okay. Can the chair be a member of nomination committee or audit committee? Can a chairperson be the member of remuneration committee or audit committee? No. Sorry. Nomination committee and audit committee. It can't be a member. But for remuneration committee, the chair can be a member. But the chair of the board cannot be a chair of remuneration committee. It can't be appointed as a chair of remuneration committee. It can be appointed as a member. It can be a member of remuneration committee. Condition is he should be independent. This point what we discussed just now. And there should be at least one member of audit committee having recent and relevant financial experience. And at least 12 months का experience होना चाहिए if a chair is up for the chair of remuneration committee. Done? Okay, this was the crux. Now quickly let us go through what is it. What is audit committee? Means audit committee. Audit committee can help a company maintain objectivity with regard to financial reporting and the audit of financial statements. Financial reporting and audit of financial statements. Audit committee is a subcommittee of the board of directors, usually containing a number of non-executive directors. Correct? The role and function of the audit committee should be set out in written terms of reference. It should be in written terms. The chairman should not be a member of the audit committee. Correct? The chairman cannot be a member of audit committee. We have already studied in the notes. At least one member should have recent and relevant financial experience, already covered in our notes. Provide evidence on whether the annual reports and annual accounts are fair, balanced, and understandable. Provide necessary information to shareholders to assess the entity's performance, business model, and strategy. These are the roles and responsibilities. Now, there is roles and responsibilities of audit committee. Any 6 points you can learn. Okay. Okay, learn any 6 points of roles and responsibilities of audit committee. Okay, very easy it is. See, audit committee is nothing but audit committee. Why am I not able to write? Just a second. Okay. Audit committee is nothing but TCWG, those charged with governance. Okay. Directors are those charged with governance. I'll explain you the client. There are 3 levels of clients, right? So TCWG, audit committee also comes in the form of TCWG. Okay. Advantages of having audit committee: improve the quality of financial reporting, create a climate of discipline and control, reduce the opportunity for fraud, provides independent judgment, strengthens the position of internal audit department by providing independence for management, increase public confidence about the credibility and objectivity of financial statements. Need not by heart anything, just go through it, understand, and you can write in your own words. Drawbacks of audit committee: the executive directors may not understand the purpose of an audit committee. Correct? See, audit committee, the executive directors are who? They are the persons who are responsible for the day-to-day activities of the business, right? The executive directors. So what is the drawback? That the executive directors may not understand the purpose of an audit committee. See, audit committee is an independent person, right? Correct? And executive directors, they are working from so many years. They will not understand what the purpose of audit committee, because they are working in the company for so many years. They have more knowledge about this. And audit committee, when some other person comes and tell you about your mistakes, they'll be like, who is that person? I am working in this company for so long. Correct? The executive directors, I know in and out of the company. I have worked from the starting, every base level I've come and I've reached this level of executive director. And the some other person, third party, for them, audit committee is a third party. So they'll be like some other person is coming and telling about the business that it is not working this way, and all, right? So that is the drawback of audit committee. The executive directors will not be happy. Correct? There may be difficulty in selecting sufficient non-executive directors with the necessary competence in auditing matters. Because it will be very difficult to select, right? Because audit committee should have so much of knowledge and experience above executive directors. Only then it will work out. And it is very difficult to appoint them, to select them. Cost may be increased, correct? The formalized reporting procedures may dissuade the auditors from raising matters of judgment and limit them of reporting only matters of fact. They'll only report matters of fact then. This is what it is. Next, auditors' responsibility. Auditors are required to report on whether listed companies comply with specific provisions within the UK Corporate Governance Code. What auditor has to report? Director's responsibility. It is the director's responsibility, right, for preparing the annual report, accounts, explaining the report. Annual report, you know, right? The company will have an annual report. If you go and check on the website, you'll get to know what is annual report. It is all the company's data will be there in that annual report. Effectiveness of the risk management and internal control systems. Audit committee of at least, audit committee of at least 3 non-executive directors are set up. That they have to report. The auditor has to report about all these things. Audit committee terms of reference is set out in writing, correct? It should be set out in writing. Audit committee monitors and reviews effectiveness of internal audit activities. If external auditor provides non-audit services, then the annual report sets out how independence is maintained. So all these are the responsibilities of auditor, and he has to report on these. Just go through it quickly and understand what you have to write. 5 points you can write. 6 points are there. All 6 points you learn. Write it in your own words. No technical words as such. Next, what is a nomination committee? Board appointment of directors should be made by nomination committee. Who appoints board of directors? Nomination committee. Nomination committee should be made up of independent non-executive directors. Correct? Majority of we studied right in the notes that in nomination committee, majority of the directors should be independent non-executive directors. Board appointment should promote diversity of gender, social, and ethnic backgrounds. Now, remuneration committee, very important. Executive directors' remuneration should be based on performance, correct? Non-executive directors should be fixed. The remuneration should be fixed. But executive directors' remuneration should be based on performance. Executive directors' remuneration should be fixed by remuneration committees. Non-executive directors' remuneration is fixed by AOA, Articles of Association. Remuneration committee should consist of at least 3 independent non-executive directors, correct? And executive director should not sit on the remuneration committee. Executive directors should not sit on the remuneration committee, because remuneration committee there should be how many? 3 non-executive independent directors, correct? The chairman cannot chair. See, this is the same point what we studied. The chairman of the board cannot become the chairman of the remuneration committee. However, chairman can be a member of the remuneration committee, but he or she should be independent. The remuneration committee is responsible for setting remuneration for chairman, executive directors, and senior management, but not non-executive directors. Level of remuneration be based on time involved and responsibilities of the role. Non-executive director's salary should be fixed and should not be based on profit or performance of the company. Correct? Non-executive director's salary should be fixed and should not be based on profit or performance of the company. Executive director's remuneration should be based on performance. Non-executive director's salary should be fixed. Done? We are done with corporate governance. Majorly, you have to remember these notes. Notes were very important. All these notes. Okay? Any doubt? We'll start with professional ethics. Just 2 minutes. We'll start in 2 minutes, okay? Take a 2 minutes breather. RUTH is Ruth, is it? Can you unmute and tell me what is your name? She is gone for a break. Okay. How is the preparation going on? Audit. Yukti, how is it going?
It is
Going on.
quite good, but it's still only 2 days are left, so there is some nervousness.
That will be there. Till the last moment, it will be there. No worries. You have given mocks, right?
Yes.
Okay. Where is Ruth? Am I pronouncing her name correct? Okay. Another 1 minute will wait and I will start. Today I'll be sharing the notes, okay? All I'll compile and I'll sell in one PDF itself. Okay. Let's start. Okay, Ruth is back. Am I pronouncing it right?
Yes, yes,
It's Ruth, is it?
yes, it's Ruth.
Yeah, okay. You're from?
Ethiopia.
Okay. Okay, let's start now. Professional ethics. 5 fundamental principles of professional ethics. Integrity, objectivity. Integrity means being straightforward and honest. Objectivity means not allow bias, conflicts of interest, and undue influence. Professional competence and due care means maintain professional knowledge and skill. Confidentiality and professional behavior. Comply with relevant laws and regulations and avoid any action that discredits the profession. You should maintain professional behavior that should not that you should not discredit the profession. What are the 5 principles? Integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. What is confidentiality? Confidentiality requires members to refrain from disclosing any information, correct? You should not disclose any client's information. You should keep it confidential. Except, except disclosure is permitted by law, authorized by the client or the employer. 2 things. Only in 2 things you can disclose the client's information. If it is required by law or if it is authorized by the client. Next. Important question. What are the factors that members should take into account when deciding whether to make disclosure in public interest? Okay, whether it is affecting the public, whether the public are interested in that particular field. That's the reason you have to disclose that. Disclose the facts. What are the factors based on which you will disclose it in public interest? The size of the amount involved, depending on the size. If the size is too huge, then you have to disclose it. Extent of likely financial damage, if there's any financial damage. Whether members of the public are likely to be affected. The possibility or likelihood of repetition. The same thing is happening again and again. They're doing the same errors again and again. The gravity of the matter, the intents of the matter. Based on these factors, you will decide whether to make disclosures in public interest. The size of the amount involved, learn it along with me only. The size of the amount involved, extent of likely financial damage, whether members of the public are likely to be affected, the possibility or likelihood of repetition, and the gravity of the matter. What is obligatory disclosure? Means you have an obligation to disclosure. You'll not think about the factors now. Here you were deciding based on these factors whether to disclose or not. Here it is an obligated disclosure. When, remember this word, money laundering. Whenever money laundering, it is an obligatory disclosure. If the employee or auditor suspects money laundering, it should be reported to the audit authorities. Okay. Threats to independence. What are the threats to independence? 5 threats. Self-interest threat, self-review threat, advocacy threat, familiarity threat, and intimidation threat. What is self-interest threat? What do you mean by self-interest threat? You have some business relationship, you are having some financial interest in that company. Those are all your self-interest threat. I'm just giving you overview what it is. We'll be studying in detail next. What is self-review threat? Self-review means you had performed some services, you had given some services prior, and now you have become an auditor. So now when if you have done some, if you only had performed some services, and now when you are auditing it, okay, when you come to know some mistakes about that work, what you had performed, what you only had performed earlier, correct? So will you openly share that these were the mistakes made by you only when you become an auditor? No, right? So that is a self-review threat. That is a review threat. Means your own mistakes you'll not be ready to show, right? So that is self-review threat. Advocacy threat. Advocacy threat means about the company, about the client, you had given some decisions, you've given some conclusions, okay? And now you have become auditor and there is some changes in the situations. If you give a bad opinion, maybe whatever you had told some statements, right, about the company, that might become contradictory. So now you will think before giving the statements, whether should I, before giving the audit report or audit opinion, you'll think whether should I give, will it impact my statement what I had given before. That is your advocacy threat. We'll study in detail, okay? Familiarity threat. For a long period of time, if you're continuing with the business with the same client, if you're the key engagement partner with the business same every year and year, there will be a familiarity threat. Intimidation threat is same as self-interest threat, but here we'll study down what is it, what is intimidation threat. We'll study with the definition and examples there. Just a second, someone is texting me. Giving me work. Okay. Okay. What is self-interest threat? Hold on for intimidation threat. We'll come back to that. So self-interest threat and the safeguards. Financial interest does not allow the following to own a direct or indirect financial interest in a client. Client means either the audit firm or the member of the audit team or an immediate family member of a member of the audit team. All these three people, that is audit team, member of the audit team, and the immediate family member of the audit team. These three people should not have direct or indirect financial interest in the client. Okay, they should not have direct or indirect interest in the client. If they are having, then there will be a self-interest threat. We have to make some safeguards. So what are the safeguards for that? Disposing of the interest, eliminating that interest, the financial interest, eliminate it. Removing the individual from the team if required. Whosoever interest is there in that company or the client, remove that person from your audit team. Or keeping the client's audit committee informed of the situation. Inform the audit committee. Audit committee is who? See, okay. Audit committee is auditors, team, or company's part. Tell me this. Audit committee is auditors, team, or company's part of company. Correct? Be very careful. So don't go with the word audit, okay? So audit committee is a part of company, right? So you have to inform the audit committee of the client about the situation of financial interest. These are the safeguards which you will have against this financial interest. Next, close business relationships. Same, the audit firm, either your whole firm or the members of the audit team or an immediate family member of a member of the audit team. All these three should not have close business relationship with the client. They should not have close business relationship with the client. If they are having, then again self-interest threat will be hampered. There will be self-interest threat. Examples of business relationship: having a financial interest in a joint venture. You and the client are having joint venture. Firm acting as a distributor or marketer for the client. As an audit firm, you are acting as a distributor or marketer for the client. So this is strictly not allowed. If material, it is not allowed. Okay, this self-interest threat will not be allowed. Otherwise, if if you cannot remove it, then remove the individual from the team. Whoever is concerned with that problem, remove that individual from the team. Always that is a safeguard, standard safeguard. Exclude that team member from your team. Next, employment with an audit client. If you are if you are having some employment relationship with the audit client, a member of the audit team entering into employment negotiations with the audit client, what you have to do again, same, remove the individual from the audit team, correct? If he is the having some employment relationships with the client. A review of any significant judgments made by that individual while on the team. Review. Either you remove that individual from the audit team, or whatever that individual who is affected, review his significant judgments. Whatever judgments he is making, please review it. Next, family and personal relationships. That is also self-interest threat. Remember, familiarity threat doesn't mean family relationships. Self-interest threat means family and personal relationships. Familiarity threat is for a longer period of time we are having business with each other. Like I am the auditor for a longer period of time with you. Family and personal relationships is a self-interest threat. You should be able to identify which threat it is and what should be the safeguards. Family or close personal relationship between audit firm and client staff could seriously threaten independence. Correct? Auditor may place his or her family relationship above the needs of the users of the financial statements. Correct? That is the threat. He can keep his family members relationship above the needs of the users of the financial statements. But it should be other way around, right? Users of the financial statement should be given more priority. Remove the individual from the team. Safeguards, very simple answers it is. Remove the individual from the team. Now, gifts and hospitality. Have you seen this movie? कौन सा movie था ये? हिसाब बराबर. Okay. Is anyone seen this movie हिसाब बराबर? Okay. After your audit exam, now so you can't watch. After your audit exam, watch this. हिसाब बराबर. माधवन, okay? वो जो 3 Idiots में he played the role, no? This, okay? Very good it is. You'll understand so much about business, about bank, about all this. In that clearly it shows gifts and hospitality is a self-interest threat. Okay? After your exams, watch it. Okay, gifts and hospitality. Unless the value of the gift or hospitality is trivial and inconsequential, a firm or a member of an audit team should not accept the gift or hospitality. Correct? If you're accepting the gifts and all, they are giving, मतलब आपको मक्खन लगा रहे हैं. They are making you nice. So do not accept gifts and hospitality. That will result in self-interest threat. Loans and guarantees. Acceptable if loan is from financial institution client under normal lending terms. Correct? If you're auditing such a firm wherein their normal business is only of lending loans, then no problem. Or else you should not accept loans and guarantees. It will have a self-interest threat. Overdue fees means you're not getting the payment yet. So you'll have that self-interest, right? You have completed the audit work and you're not getting money now. So if you give wrong opinion, if you tell bad about the company, what if the management will not pay you? So that's self-interest that you will have. That is overdue fees. A self-interest threat can arise if the fees remain outstanding, as the auditor may feel pressure to agree to certain accounting adjustments in order to have the previous year and this year's audit fee paid. In addition, accounting fees could be perceived as a loan to a client, which is strictly prohibited. That means one thing is you will be scared that what if I don't get my payment? So you will compromise on the procedures. You will compromise on and you will agree with the terms of the management, whatever he is telling. Or you can take other way around is if you're not getting the fees, it is like you are, as an auditor, you are giving loan to the client, to the company. This is what it says. In addition, outstanding fees could be perceived as a loan to a client, which is strictly prohibited, correct? You can't give a loan to the client. Again, you will have a financial interest in that. It will become a self-interest threat. What are the safeguards? Discuss with TCWG the reasons why the payments have not been made. Discuss with TCWG, why I am not getting the payment of audit fees yet. Should agree a revised payment schedule, which will result in the fees being settled before much more work is performed for the current year audit. Correct? Contingent fees. Your fees should never be contingent in nature, correct? Means it should not be based on some outcome. If it is based on some outcome, then that will not be proper, right? That is what it says. Contingent fees are fees calculated on a predetermined basis relating to the outcome or a result of a transaction or the result of the work performed. It is not permitted. Remember, contingent fee is not permitted, strictly not permitted, because it will affect your performance then. High percentage of fees. What is happening? High percentage of fees. When a firm receives a high proportion of its fee income from just one audit client, means you hardly have 2 or 3 audit clients, okay, and you have only one major audit clients wherein your 80% of your income of your bread and butter is from that one client, correct? That will be again a self-interest threat, right? That is what it is. Fee income from just one audit client. There is a self-interest or intimidation threat. Auditor will become overly reliant on the client, compromising objectivity, correct? If you know that you have only one client, you're relying only on that one client for your bread and butter, then obviously you will compromise on your performance. So that is also self-interest threat. What are the safeguards for that? For audit clients that are public interest entities, the court states that total fees from the client represent more than 15% of the firm's total fees. For 2 consecutive years, the firm shall disclose this to TCWG, arrange for a review to be conducted either by an external professional accountant or by a regulatory body. More than 15% of the firm's total fees is from the total fees of the client. Then you have to disclose this to TCWG and arrange a review. If the total fee significantly exceeds 15%, then a pre-issuance review will be required. You have to review that. Why you're getting fees so much from only one client, correct? Partner on the client board. The audit firm may be perceived as performing the role of management by attending board meetings, and this threatens objectivity. Correct? Partner on the client board. You can't be a partner, right? The audit firm may be perceived as performing the role of management by attending board of meetings, and this threatens objectivity. And it is not allowed. Correct? It will hamper your independence. Done with self-interest threat? Quickly just let us revise the headings. Financial interest, having some financial interest, close business relationships, employment with an audit client, family and personal relationships, gifts and hospitality, loans and guarantees, overdue fees, contingent fees, high percentage of fees, partner on the client board. Done? Next, self-review threat. Just a 2 minutes break. Let's take a 2 minutes breather. Shall we continue? Yes, come back. Ishika, right? How is studies going on?
I'm good.
Good, is it? You've
Yes.
given mock exams.
Yes.
Okay. Okay. So let's start. Self-interest threat. Recent service with an audit client. Correct? I said, you're providing services and then you're auditing and then you find out some mistake in your own service, what you had given. That is self-review threat. Individuals who have been a director or officer of the audit client or an employee in a position to exert direct and significant influence over the preparation of the accounting records or financial statements in the period covered by the audit report should not be assigned to the audit team. Remove the individual from the audit team. Correct? That is nothing but I said, if you are giving some service earlier and now you have been put in the audit team, can you be a part of that team? No, you have to remove it because there is a threat of self-review. Preparing accounting records and financial statements. If you are preparing accounting records and financial statements in listed committees, it is not permitted. It is not permitted. Strictly, it is not permitted. But for other companies, other than listed companies, permitted with the following safeguards. So what safeguards you have to keep? Using staff members other than audit team members to carry out work. Correct? There should be two different teams. Obtaining client approval for work undertaken. You have to obtain the client's approval. Independent review by a professional accountant. There should be some person to review it. These safeguards, if you take, then preparing the accounts also you can do no problem. Normally, who prepares the accounts? Financial statements, management. Correct? That is for listed companies. Listed companies, it's very strict. As an auditor, you cannot prepare financial statements at all. But for other companies, safeguards are there for that. Valuation services. If you are giving valuation services mean finding the value of an asset, liability, or business. Audit firms should not carry out valuations on matters which will be material to the financial statements which involve a significant degree of subjectivity. If the valuation is for immaterial matter, the audit firm should apply safeguards such as, see, if it is a material matter valuation, you are not allowed only. You're not allowed to carry out that valuation process, that valuation service. But if the valuation is for immaterial matter, then the audit firm can apply, but you have to apply some safeguards for that. Same, review by an independent professional accountant. There should be some person to review that work, confirming that the client understands the valuation and the assumptions used, ensuring the client acknowledges responsibility for the valuation, using separate personnel for the valuation and the audit. Correct? Either you remove that from the team of the audit person or use separate personnel for the valuation and the audit. Okay? Means the person who has done valuation, don't keep him in his team. Okay. Tax return preparation. If you are preparing tax returns, it does not affect independence, hence permitted. Very important. If you as an auditor are preparing tax returns, it will not affect the independence. It will not affect the independence, hence it is permitted. Tax calculations for the purpose of preparing the accounting entries. If you're making tax calculations, see, tax returns, if you're filing, no problem. Tax return. Your tax calculations, if you're doing for public companies, strictly not permitted. Other companies, permitted. Tax planning and other tax advisory services. Permitted, but the audit firm must use separate personnel for tax planning and audit services. Correct? If you see if any audit firm and all, audit team will be different, tax department will be different, right? So there should be two different teams itself. You should not merge them. Then tax planning and other tax advisory services you can give, no problem. But tax calculations for public companies is strictly prohibited. Tax returns are allowed because it does not hamper independence. Assistance in the resolution of tax disputes. Outcome of these issues may have a material impact on the financial statements, resulting in a self-review threat. Assistance in the tax, if there's some tax disputes, you're assisting in them for the resolution. Is that allowed? No, not permitted. Tax disputes not permitted. An audit firm cannot act as an advocate and auditor at the same time. Very important. If you have both the degrees, if you have the membership of even auditor, and if you have degree of even advocate, lawyer, you have to pursue only as an auditor. You can't give advocacy, you can't give advocate services. Okay, so it's written the audit firm cannot act as an advocate and auditor at the same time. Very important. Internal audit services, you are providing internal audit services. Listed companies not permitted, means the external auditor and the internal auditor in listed companies cannot be same persons. Very important. Other companies permitted but use separate teams. Other companies it is permitted but you have to use separate teams. Temporary staff assignments, the lending of staff by a firm to an audit client. Remove the individual from the audit team. If lending of an staff by a firm to the audit client means one of your team member of audit, you are lending them as a temporary staff assignment. There was some work in the client company, okay, but what happened, they were having shortfall of some staff. So what you did, from your team member you sent one staff. So is that permitted? If you're doing that, remove that person from the audit team. If you're sending your staff to the client, remove that member from your audit team. Done. So self-interest threat is done, self-review threat is done. Now advocacy threat. Very simple it is. See, I'll tell you with one example. See here, see this. Let us read the fourth example and clear about what is advocacy threat. Understand what is it. Promotion of shares of a listed audit client. What it says? Promotion of shares of a listed audit client. What happened? You had one client whose company was as a listed company. It's a listed company, okay? So what you're doing, you're promoting his shares. Okay, you buy that company's shares, that share price will go up and all. You're promoting the client company shares. Then what happened? To whom are you promoting? How are you promoting? By attending the meeting of prospective investors. Prospective investors means they are planning to invest or not invest. They are prospective investors. They are yet planning to invest. So as a person, as an auditor of their company, you are promoting them. Okay, you buy the shares, the company's share price will pakka go up. You're telling them, you're giving them a statement. And now as an auditor, there is an advocacy threat right now. For example, now if in the audit report, if you give wrong opinion, correct, if you give some bad comments and all, means bad opinion, then the share price will go down, right? So then you had given the statement to the prospective investors that the price will go up, so they have bought shares believing you, trusting you, right? And then when you give an audit report again with negative remarks and all, the share price will go down. So there is an advocacy threat. Advocacy threats arise in those situations where the audit firm promotes a position or opinion to the point that the subject objectivity is compromised. Correct? No safeguards exist for advocacy threat. There are no safeguards for advocacy threats. Examples: commenting publicly on future events in particular circumstances, having made assertions without detailing the assumptions, acting as an advocate on behalf of the audit client, representing client before authorities such as tax authorities. All these are advocacy threat examples. Okay, you have to know which example is which threat, comes under which threat. Correct? What do you mean by intimidation threat? Intimidation threat means what? Simple it is. An intimidation threat arises when members of the audit team may be deterred from acting objectively. They are not acting objectively. These could arise from family and personal relationships, litigation, or close business relationships. These are also examples of self-interest threats. Management imposes limitations to audit, such as shorter audit time period is also an intimidation threat. Means what is happening? The management is telling you, but quickly finish the audit. Take less time and finish. Don't spend more time on it. So he is limiting you. He's making limitations with the audit. To the auditor, he's telling, okay, he's putting some conditions, restrictions. That is intimidation threat. Safeguards. disclosing to the audit committee the nature and extent of the litigation, removing specific affected individuals from the engagement team, and review by an independent professional accountant. If you remember this review, removing all this is very common points. Now you are understanding where what? Next. What is familiarity threat? Don't confuse it with like family members. Familiarity threat doesn't mean that. It means you're having a close business relationship that is for a long period of time. For a long period of time, you're serving as an audit client. Having personal, family, or close business relationship. Which relationship you're having? Business relationship. Okay, then it is familiarity threat. Having an audit client for a long period of time may create a familiarity threat to independence, as auditor may not retain professional skepticism and objectivity. Correct? Rules for listed companies. Remember this very important point. If an individual is a key audit partner, that is key engagement partner for 7 years, then he must be rotated off the audit for 2 years. Means after 7 years, there should be rotation of key engagement partner. For the next 2 years, he cannot be the key engagement partner. If he has already served as a key engagement partner for 7 years. How many years? 7 years. Rotation is for 2 years. If key audit partners' continuity is particularly beneficial to audit quality, what it says, if key engagement continuity, if it is beneficial to the audit, if the same key engagement partner, if it continues and it is beneficial to the quality of the audit, and there is some unforeseen circumstances, then in that case, such as intended engagement partner becoming seriously ill, then means intended engagement partner means now the person who will become the engagement partner, he has become ill now. So who will be the engagement partner? Again, the person who was already the engagement partner, right? In these rare situations, the key audit partner can remain on the audit for an additional year, making 8 years in total. Normally, how many years it is? 7 years. But in some rare circumstances, wherein it is beneficial to the beneficial to audit quality. Example they've given is intended engagement partner becoming seriously ill. The new engagement partner who has been appointed, no, he is seriously ill. So in that time, the previous engagement partner can be appointed again, making it as 7, 8 years. But there should be what? The key engagement partner can remain on the audit for this, making 8 years in total. Okay. But it should be what? Beneficial to the audit quality. Only then this situation is allowed. Other companies, this was what for listed companies, that 7 years, 2 years criteria is for listed companies. Other companies permitted with the following safeguards: rotating the senior personnel of the audit team, independent review by a professional accountant, regular independent internal or external quality reviews of the engagement. For these, there are no particular years and all, they're not given any years. But they've told about rotation, they've told about independence, they've told about professional conduct, professional accountant, everything they've told, review by professional accountant. But for other companies, they have not mentioned years, particular years and all. Okay. So we are done with professional ethics. So we are done with corporate governance and professional ethics. So we are done with subsequent events and going concern also, right? Now, these 4 chapters. Subsequent events, write down, okay? Very important, these 4 chapters. Subsequent events. Okay. Going concern. Subsequent events, going concern. Then corporate governance. Corporate governance and professional ethics. These 4 chapters in section A, very important. Correct? Out of these both, you will get 1 case study. Out of these both, you will get 1 case study. In majorly, this means like usually you will get this case studies. Correct? See, in section A, there will be total 15 questions, right? 15 sub questions. 3 case scenarios divided into 15 sub questions. In each, there will be 5, right? 5, 5, 5, which make up to 15. Correct? Each carrying 2 marks. which sums up to 30 marks. So in section A, now I'm giving you tips about exam. In section A, 12 to 16 marks. Very easy scoring it is. Very easy scoring if you have studied thoroughly. If you have studied thoroughly, if you have practiced a lot of MCQs, if your concepts are strong, 12 to 16 marks is easy, very easy. Correct? Next, six to eight marks. How many marks? 6 to 8 marks will be based on your analytical skills. Okay? 6 to 8 marks, it's not like you'll not be able to score. I'm telling you, these are guaranteed marks. This, so you should get, I'm telling. 12 to 16 marks, you should get. If you're practicing all the questions, if you're having all the concept notes, if your concepts are strong, these 12 to 6 marks is very easy. 16 marks, 12 to 16 marks. This 6 to 8 marks, next 6 to 8 marks in that section A, it depends on how well or how much you're practicing. Again, okay, it will be little tricky. Means you have to be very careful while doing it. This is very easy. As soon as you read the question, you'll be able to answer it if you practice well for these 12 to 16 marks. But for this 6 to 8 marks, you have to be little careful while reading the questions. There'll be some similar options. You'll be little confused like that. But again, scoring it is. Scoring, but you have to be little careful. Remaining 4 to 6 marks. Challenging question. What it is? Challenging question. Means they'll frame some new question. Okay. By seeing these questions, you should not be like, oh no, I don't know, how will I do? You should not get panicked that time. That is what is the game of exam, correct? Always in an exam, out of 100 marks paper, 60 to 65 marks, any paper you take, 60 to 65 marks is always manageable paper, correct? You have to always find these 60 to 65 marks first and attempt quickly and score these 60 to 65 marks perfectly. Then there'll be around 20 to 25 marks, which are not like out of the box or something, but that is little challenging again. Correct? Means this next 20 to 25 marks will require a lot of practice, a lot of hard work will require for that, and a lot of focus and attention. The remaining 10 to 15 marks, for those 10 to 15 marks, it will be little challenging. It will be new questions. Some new questions can be framed, right? It is not like all will be repeated questions. So the 10 to 15 marks, some new questions also can be framed. But still you can attempt it, right? It's not like it will be like something different only. It will be part of audit only, right? So you have to attempt it. First and foremost criteria is you have to complete paper, complete 100 marks, 100% you have to complete the paper. Very important. If you are attempting only for less marks, how will you pass? Correct. Now, if you're attempting only to 80 to 85 marks, how will you pass? So the first criteria is 100 marks paper you have to attempt. Section A, you should not take more than 30 to 35 minutes, maximum 30 to 35 minutes. Now, in this also I'm telling, I told you no that 16 to 8, I told you no 12 to 16 marks is easy scoring. So that quickly tick, tick, tick will be going on. Quickly you have to do it. Then that next, where is it? 6 to 8 marks, I said, 6 to 8 marks is little challenging. So what will you do? If you're getting stuck in any question, in any MCQ question, you're getting stuck. What you do? That time, after reading that question and after reading the options, at that moment, what you feel is the right answer, tick that answer. Mark whatever the answer is and flag that question. Don't just flag that question directly. Okay? First, mark your answer also. That time, whatever is feeling right to you, whatever is your inner feeling, mark those answers and then flag it. If you only flag it, no, in the end, for by chance, if you don't have time, correct? You'll not be panicking, okay, I have to still attempt that paper, correct? Because there's no negative marking there's no negative, you'll not get minus marking, correct? You will either, if your answer is correct, you'll get 2 marks or you'll get 0 marks. There's no partial marking also. It's either 2 marks or 0 marks. You will not get minus if your answer is wrong. Correct? So always remember, this is a trick. If you're stuck in some question, obviously there will be some new questions also, right? So whatever is some confusing question or something like that, don't spend more time also. If you're stuck at that question, don't spend more time also on that. You have to have a target that within 30 to 35 minutes you have to complete the section A questions. So read every question one by one, and wherever you're getting stuck, mark whatever at that moment, whatever you feel that answer is, mark that and flag that question. Later on, after completing section B, come back to that flat questions and check if you want to make any changes to your answers. Correct? But don't forget to mark your answers then and there. Very important tip I'm giving you. This is about your section A, 30 to 35 marks. Section B we'll talk about later on. Okay, section A, any doubt? All clear? Okay, this is how you have to approach. Okay. Next, we'll be doing audit report, okay? Ruth, how is the preparation going on?
It's going well.
It's going good, is it? You have
Yes.
given mock exam?
Only one.
Only one, is it? Okay. No worries. Okay, let's start.
Ma'am,
Audit report. They'll ask you what are the contents of audit report. You have to know it. Okay. And this is a proper format. You have to know it. What happened? Tell me, Yukti.
ma'am, in section A, there are some questions like true, false, and match the column, which are really typical. In that true, false, sometimes one is correct and other one is not correct. So these situations are happening. So how to handle that?
How to handle that? By a lot of practice, by making your concepts clear. Practice and read the suggested answers. They'll give you the explanation also, right?
Yes.
The answers in section A. So you have to read that. Correct? You just don't have to see whether your answer is right or wrong. Always make that. If your answer is right also, still always try to read the explanation part given by the suggested answers, given in the suggested answers. Also, that will help you build your concept more stronger. Correct? Yeah, because true or false, what you said, no? Even if your one answer is correct and one answer is wrong, out of 4 options, 2 are correct, 2 are wrong, or something like that, we'll get 0 marks. Correct, no? So you have to be very careful while choosing answers. Okay, that will come by practice, no problem. Okay. Content of audit report. What are the contents of audit report? Title. Independency, or even the explanations you have to write when they ask you the contents. You just can't write the headings. You have to write the explanation part also. Okay. Title. Independent Auditor's Report. Addressee. Shareholders or other appropriate addressee, whichever is appropriate addressee. Report on the audit of financial statements. Mention the name of the company, mention the financial year end, mention the financial statements that were audited. Okay. Opinion. State that the audit was conducted in accordance with international standards on auditing, that is ISA. That is your opinion. State that the auditors have complied with independence and ethical requirements. State that sufficient and appropriate audit evidence has been obtained. All this you have to state. Next. Below the opinion paragraph will be the basis of opinion paragraph. Basis for opinion paragraph. When basis for opinion will come? When there is a modified opinion. We have studied yesterday, right? Whenever there is modified opinion, basis for opinion paragraph will be there, and that will be below the opinion paragraph. Below the basis for opinion paragraph, there is a key audit matters paragraph. We'll be discussing now. After this audit report, we'll be discussing all these 4 paragraphs. Key audit matters paragraph, other information, then there is emphasis of matter paragraph and other matter paragraphs. Responsibilities of management and TCWG for financial statements and auditor's responsibility. Both the responsibilities, management and TCWG's responsibilities and auditor's responsibilities. What is management's responsibilities? We have already studied this also. Preparation and fair presentation of financial statements is management's responsibility. Maintaining and implementing internal controls, assessing going concern. Correct? We have studied this in which one? Preconditions, if you remember. Preconditions, the second point was management's responsibilities. What is the responsibility of TCWG? Overseeing the company's financial reporting process. Auditor's responsibility. Go through these auditor's responsibilities. Okay. All these points, any 6 points you can write down. Then signature. Signature in name of the audit firm, the personal name of the auditor, or both. Then auditor's address and date. This is the format of your content of audit report. Okay. Title, addressee, report on the audit of the financial statements, opinion, basis for opinion, key audit matters paragraph, other information, emphasis of matter paragraph, other matter paragraph, responsibilities of management and TCWG, auditor's responsibilities, signature, auditor's address and date. This is your audit opinion. Auditor's report, contents and this one. Now we'll be studying about these 4 paragraphs. Okay. Paragraphs. Okay. ISA 706. Emphasis of matter paragraph, very important. Okay. Emphasis of matter paragraph and other matter paragraph. 2 paragraphs we are studying in ISA 706. First we are studying about emphasis of matter paragraph. When emphasis of matter paragraph will come? Items are clearly presented or disclosed in the financial statements. When emphasis of matter paragraph will come? When the items are clearly presented or disclosed in the financial statements. Items are important for very important term, users' understanding of financial statements. Items are important for users' understanding of financial statements. This word you have to remember. In objective type question, they can ask you. In OTQ, objective type question, they can ask you. They'll give you the statement, which paragraph? You have to state it is an emphasis of matter paragraph, correct? So users' understanding of financial statements. It is a part of audit report. It is shown below the basis of opinion paragraph. Am I right? Below the opinion paragraph is the basis of opinion paragraph. Below the basis of opinion paragraph is the key audit emphasis of matter paragraph. Emphasis of matter paragraph. It should be clearly mentioned that audit opinion is not modified. Be very careful. In emphasis of matter paragraph, EOM paragraph, the opinion should be which opinion? Unmodified opinion. Correct? Modified opinion, you can't give emphasis of matter paragraph. The opinion is not modified. So what are the terms? Clearly presented and disclosed in the financial statements. Users' understanding of what? Financial statements. Users' understanding of financial statements. Part of audit report, it is shown below the basis of opinion paragraph, and it is clearly mentioned that audit opinion is not modified. Not modified means it is unmodified. What is an example of emphasis of matter paragraph? Let us see how it is written. How is it written in the auditor's report? We draw attention to note 10 of the financial statements, which it is just an example, okay, which describes uncertainty related to outcome of litigation not modified in respect of this matter. This is the way we present in the auditor's report. We are just talking about litigation. We are not giving modified opinion, but we are just highlighting that, okay, there's some litigation, there's some case which is having uncertainty relating to its outcome. Okay, that is your emphasis of matter paragraph. Now, what is the other matter paragraph? There are 2 paragraphs, right? Emphasis of matter paragraph and other matter paragraph. See, listen very carefully. Here it is clearly presented. Here it is not presented or disclosed in the financial statements. Here it is presented, and here it is not presented and disclosed in the financial statements. Be very careful. Emphasis of matter paragraph, clearly presented or disclosed in the financial statements. Other matter paragraph, not presented or disclosed in the financial statements. Relevant for users' understanding of audit and auditor's responsibility. Here it is users' understanding of financial statements. Be very careful. Emphasis of matter paragraph, users' understanding of financial statements. Other matter paragraph, users' understanding of Audit and auditor's responsibility. Be very careful. It is financial statements. Here it is audit and auditor's responsibility. Other matter paragraphs. Okay. Done. Next, key audit matters. Key audit matters. Key audit matters. Those matters as per the auditor's professional judgment were of most significant important in the audit of financial statements of the current period. Whichever is the most significant, that will show in key audit matters paragraph. As per the matters as per the auditor's professional judgment were of the most significant. In the audit of the financial statement, when you're auditing, whichever matters you feel which is most significant, those matters you put in key audit matters paragraph. And normally and usually, these matters are selected from which? Which are those matters? It is selected from communicated with TCWG. The matters which are communicated to TCWG, no? The key audit matters are selected from those matters which are communicated to TCWG. Okay. They are component of the unmodified auditor's report for audits of listed companies. What are they? They are a part of the unmodified auditor's report for audits of listed companies. They provide greater transparency about the audit because you're writing some matters on how it is performed, what all we had discussed with the TCWG, correct? When the auditor issues a disclaimer of opinion, very important point now coming up. When an auditor issues a disclaimer of opinion, you remember disclaimer of opinion is issued when? Only when you're not able to obtain sufficient and appropriate audit evidence, correct? And when the misstatement is pervasive, material and pervasive, correct? So whenever the auditor is issuing disclaimer of opinion, key audit matters paragraph should not be included in the auditor's report unless required by law or regulation. So whenever there is disclaimer of opinion, key audit matters paragraph do not include. Then be very careful. In emphasis of matter paragraph, there should be only unmodified opinion. In key audit paragraphs, there should not be disclaimer of opinion paragraph. Okay. Contents of key audit matter paragraph. What are the contents now? Areas of risk of material misstatement, because that will be communicating to TCWG. Significant auditor's judgment in relation to areas of the financial statements that involve significant management judgment. Management judgments, 3 parts, you remember, right? Accounting estimate, accounting policy, and going concern. Only in these 3 cases, management uses its judgment. This might include accounting estimates which have been identified by the auditor as having a high degree of estimation uncertainty. The effect on the audit of significant events or transactions that have taken place during the period and how this matter was addressed in the audit. Okay. Next, the auditor's responsibility relating to other information. Don't get confused with other matters and other information. Other matter paragraph was what? They are not presented or disclosed in the financial statements. Users understanding of audit. It is related to audit. Other information now. That was other matter. This was other matter. Now what we are studying is other information in documents containing audited financial statements. What are other information? Other information is financial and non-financial information other than the financial statements and the auditor's report. Be very careful. It is what? Other than what 2 things? Financial statements and the auditor's report. Other than these 2 things are other information things. Other than financial statements and auditor's report. Because financial statements, we are putting in emphasis of matter paragraph, correct? Users understanding of financial statements. Audit, relating to audit and auditor's responsibilities, we are putting in other matter paragraph, correct? And key audit matter paragraph, whatever we are discussing with TCWGs, which are of most important significance for the purpose of audit, those matters we are putting in key audit matter paragraphs. In other information, what do you mean by other information? Other than financial statements and auditor's report. Other than financial statements and the auditor's report, any other information which is included either by law, regulation, or custom in a document containing audited financial statements and the auditor's report. There'll be one document. In this document, there'll be so many things. Out of these so many things, there'll be one thing, financial statements, there'll be one more thing, auditor's report. So auditor's report and financial statements are just a part of it. There are some other informations also. That is what it is telling. Now, examples of other information. Annual report. In annual report, there will be even audited financial statements, there will be even audit report. Financial summaries or highlights, report by management, employment data, all other information other than financial statements and audit report. You have to remember that much. That's it. That is other information. Planned capital expenditure, financial ratios, name of officers and directors, selected quarterly data. Any other information other than financial statements and auditor's report are other information. Simple. Now, very important, auditor's responsibility relating to other information in documents containing audited financial statements. I said, document containing means there is a document. In that one of the item, there are so many items, right? And that one of the item is audited financial statements. Once the audit is done, the financial statements is called as audited financial statements. So what is the responsibility relating to other information? Auditor should read. Auditor should read. You have to use these words, okay? Auditor should read the other information to identify material inconsistencies. What auditor has to do? Auditor should read the other information to identify material inconsistencies with the audited financial statements. If a material inconsistency is identified with other information, if material inconsistencies is identified, the auditor shall determine whether the audited financial statements or other information needs to be revised. Now again, be very careful with these points. Okay, what it says, auditor should read the other information to identify what material inconsistencies with the audited financial statements. What we are checking now? Audited financial statements. But we are reading what? Other information. And we are checking what? Audited financial statements. Whether there is some inconsistencies with other information and audited financial statements. If a material inconsistency is identified, the auditor shall determine whether the audited financial statements or other information needs to be revised. So what is wrong? If it, see, you have to other information and audited financial statements, AFS. These two things you will see now. If there is inconsistency, means it is not equal. If there is inconsistency, and if it is material inconsistency, then auditor should determine whether this should be revised or this should be revised. Okay. Now, if there is consistency, you have to check what should be revised. If the revision is required in audited financial statements or revision is required in other information. If financial statements need to be revised, now first we're talking about this part. If audited financial statements need to be revised, but management is refusing it, but they are not ready to revise it, the auditor shall modify the audit opinion. If the other information needs to be revised, means now if this needs to be revised, not this, and again management is refusing, then what auditor should do? Auditor should communicate this matters to TCWG and unmodified opinion, issue unmodified opinion, including another information paragraph. Information paragraph, you should highlight it there. Or what all resources you have, or what all you can do as an auditor. Withhold the auditor's report. First thing is unmodified opinion and include other information paragraph, or withhold the auditor's report, or withdraw from the engagement where there is legally permitted. Means in other information you can't change your opinion. In audited financial statements, if that needs to be revised, change your opinion. Again, let us get this crux again. Very important it is. Listen carefully. Last time I'm explaining this. Auditors, what is the auditor's responsibility relating to other information in documents containing audited financial statements? Auditor should read the other information to identify material inconsistencies with the audited financial statements. Correct? So there is other information and there is audited financial statements. You have to read this. What you have to do? You have to read this to identify if there is material inconsistencies. Correct? Understanding till here? First point clear? You are reading under information paragraph to know whether there is any material inconsistencies in audited financial statements. Now, if you have got material inconsistencies, the auditor should determine what the first thing auditor should determine whether revision should be done in this or this. Okay, whether which statement is wrong, means whether you have to revise this or you have to revise this. Okay, if audited financial statements need to be revised, the first case we are taking as if financial statements need to be revised and management is refusing, management is not doing it, then what power we have as an auditor? We can modify the audit opinion. If it is related to financial statements, you can modify the opinion. But if you are revising this, if revision is required in other information, if other information needs to be revised, this is the second case. Other information needs to be revised. Then, and even management is refusing, then auditor should first communicate this to TCWG, and you can't change, you can't modify your opinion. If you are revising other information and management is refusing to revise, you can't change your opinion. In audited financial statements, when you are revising that and management is refusing, then you can change, you can modify your opinion there. But if you have to revise the other information, you can't change your opinion. You have to keep your unmodified opinion as unmodified opinion only and include other information paragraph. Or what is one more resource you have? Withhold the auditor's report. Don't issue the auditor report. Or withdraw from the engagement where there is legally permitted. Clear with this? Give me a thumbs up. It was an important concept. Hope you understood it. Okay. So we are done with paragraphs also. We are done with professional ethics, corporate governance, audit report and paragraphs. Let us take a short break of 10 minutes. Okay. And we shall continue at 5:55. Break. Any doubt? Anyone can speak to me now. 5:55. Okay. Welcome back, everyone. Let's start. Okay. Just a second. Is the audio video clear? Okay. Internal control. We'll start with internal control deficiencies. Case scenarios, okay? First, let me explain. What is the marking scheme? Okay. Identify and explain. 0.5 marks, 0.5 marks. Identify means from the question from the case scenario, you have to identify what is the internal control deficiency. That will be for 0.5 marks. Explanation you have to give that. That will be for 0.5 marks. Recommendation will be for 1 mark. And test of control will be for 1 mark. They can even ask one other question in internal control, that is report, which will be for 2 marks. Correct? And there are some direct questions, right? That is control objectives. That they'll ask for any mark, either if they ask for 3 marks, 4 marks, 5 marks, depending on. Okay, usually 3 or 4 marks. Write accordingly. How many marks? That many points to write. Okay. Now, you know the meaning of internal control, right? What do you mean by internal control? The policies and procedures. Correct? That should be implemented by the management to prevent, detect, and correct misstatements due to fraud or error. if there's any deficiency in internal control, why do you identify deficiencies? If the internal controls is from the point of view of management, correct, of the business we are doing. Audit risk and all what we were doing, no? Audit risk, okay, when it comes, I'll explain you that. Okay, let us talk completely about internal controls now. Internal controls, identify the risk, explain about it, 1/2, 0.5, 0.5, 1 mark, recommendation 1 mark, test of control 1 mark. If they ask you, test of control, if they ask you, then 1 mark. If no, usually they ask recommendation and identify and explain, right? Now, what do you mean by test of control? That means as an auditor, you identify there is deficiency in internal control. You give some recommendations, right? After giving recommendations to know whether the management is applying those recommendations or not, that is test of controls. Okay. After the recommendations, whether the management is applying those recommendations or not, implementing those recommendations or not, that is test of controls. Report, 2 marks. I'll just show you how the report will be. See, this will be the format of report. In internal control deficiencies, when they ask report, they'll ask for 2 marks. It is fixed, okay? The format is also fixed for internal control report. Always you have to give the addressee as board of directors. What will give the addressee always as? It is different from audit report, okay? We are giving report on internal control deficiencies. How will the format be? And they'll ask you for 2 marks normally. If you've gone through questions, you would have come across this. So always the addressee will be what? Board of directors. Then the next line, you have to write the name of the company. Take any name of the company, okay? Address of the company, any address of the company. Means if they're given in the question, write the address of the company. From the question, you have to pick up, okay? I'm just telling you the format. Addressee will always be board of directors. You don't have to think for this. Name of the company from the question, for whom you're giving. Address of the company given in the question, or write your own address and come. Any address you write and come. If in the question they are not mentioned. Then date of report. What is it? Date of the report. Very important. If they have not given in the question date, then write your exam date. Again, I'm telling, if you have not given in the question which date they have not told, write your exam date. Whichever day you're writing your exam, write that date. Then you'll put salutation, dear sirs. Then heading of the report. Audit of whichever the company is. In our example, it is Krishna Company. So audit of Krishna Company for the year ended 31st December 2024, whatever is the year. Okay. All this is format is fixed. Quickly you have to write down. Even these things are fixed. Everything is fixed. Only have to just take the name from the company, the date, the address if given, or else write your own address and come and write the date and salutation, everything you have to write. The same thing it will be, only the company name will be different and write off whichever year you're doing for. You have to write this, okay? Please find enclosed the report to management on deficiencies in internal controls identified during the audit for the year ended 31st December, whichever the year is. This you can a little bit alter also, but since you know it is for 2 marks, better to learn it off. You can write it in your own language also, there is no problem. But the red what I've marked, no, that word should be ditto. It should be exact. That is the appendix to this report. Means you're first framing this report and you're attaching that whatever Excel sheet will be showing that this is the deficiency, this is the recommendation, that is appendix to this report, means you're attaching to this report. You have to use this word, the appendix to this report. Considers deficiencies in the sales system. Example I'm giving, if the sales system is sales system. If they tell you about purchase system, you'll write purchase system. This is just a pro forma I'm giving you. Considers the appendix to this report considers deficiencies in the sales system. This you have to change and recommendations to address those deficiencies. Please note that, then second paragraph. Please note that this report only addresses the deficiencies identified during the audit. And if further testing had been performed, then more deficiencies may have been reported. What does this point mean? And every time you have to write this point. What does this mean is, during the audit, how much of our deficiency we could identify, we have identified it. If you would have done more testing, then there could be possibility of more misstatements that could be identified, more deficiencies that could be identified, not misstatements, more deficiencies that could be identified. This statement is fixed. You have to write this. Whatever is read, at least those words should be perfect. This report is solely for the use of management. It is used for the management because internal controls is whose responsibility? Management. We are giving a report to the management. It is none of the, if we are not giving to the shareholders or the stakeholders. This report is solely for the use of management. And you, if you have any further questions, then please do not hesitate to contact us. This is very important, okay? People forget to write this. Yours faithfully, your audit company name. For example, I've written Radhe & Co. Okay, audit firm. You have to use the word audit firm here. Done. This is the perfect format. If you write this, you get complete 2 marks. You think for 2 marks you have to write this much, but since it's a proper format, see, if I just tell you, in this entire format, I'll tell you all what all you have to just write. The name, the board of directors is fixed, right? This is fixed. You have to just pick out this company name, address. If it is not given, write your own address, no problem. The date, either your exam date, if it's the date is not mentioned. Everything else is fixed. The year end, whichever is the year end, this should be changed. Everything else is same. This should be changed. Whichever system you are doing internal audit, that you have to put. Means internal, whatever system you are checking, right? Not internal audit. What am I telling? Not internal audit. Whichever system you are checking, right? That one it is. This everything will be same. All other things will be same. And this company, your company name, you have to write whatever they'll mention. No, in the exam, whichever company that as an audit firm. This is audit firm's company name, and this is the company name, your client name of the company. Done. This is for 2 marks. The report in internal control deficiencies. Clear? Okay. Now, let's go on again. So we have discussed this report, which will come for 2 marks. If they ask, you have to write it in that perfect format only. Only then you get 2 marks. This we have already discussed now. Now, I'll teach you one system, that is sales system. By that system, I'll teach you how to frame your answers. 100% will not be able to complete, right? This is a revision batch. So at least I'll give you how you have to frame your answers to get full marks. Okay. So let's start with the sales system. Even I'll explain the purchase system. Other systems you'll be able to do it by yourself. No problem at all. Sales system and purchase system I'll explain you. And purchase system, only the system I'll explain you. Let's go with sales systems directly. Then you'll understand what I'm trying to tell you. Sales system. Okay. Now we are going through what? Sales system. Listen very carefully. Customer, right? There is a customer. Customer will place order with the sales department. See, if you know the sales system perfectly, you'll be able to easily understand what are the deficiencies. Correct? Same goes with the purchase department also. So the customer will order with the sales department. The first thing what the sales department has to do is he has to check the inventory. Correct? Inventory check should be done. Why inventory check should be done? Because if you don't check inventory and if you don't have that inventory, then there'll be loss of customer goodwill. What do you mean by loss of customer goodwill? The customer will be dissatisfied, will not be satisfied. What is the technical word for the customer not being satisfied? Loss of customer goodwill. For example, you have placed an order. Normal example you take of McDonald's. Okay, you went to McDonald's, you placed an order, burger, this, that. Then they're telling this item is not there. You'll be dissatisfied, no? You have chose from the menu. In menu it was there, but then you were dissatisfied because these 2 items were not there. So they have to check the inventory and then place menus, right? So that the customer is not dissatisfied. So first check the inventory, because if you're not checking the inventory and if the inventory is not there, if the goods is not there to sell it, then loss of customer goodwill or late delivery of goods to customer. Correct? Next, once the inventory is checked, the sales department will prepare customer order. What it will prepare? Customer order. It is a document. It will prepare customer order. And that customer order should be in 4 copies. How many copies? 4 copies. One, it will keep it with itself. One, it will send it to one, it will keep it with the sales. Whatever I've put in this box, no, these are the departments. Customer is a customer. I'm just telling you how many persons are involved. One copy, it will keep it with itself. One, it will give it to the customer. The other, it will give it to the warehouse department. And the other, it will give it to the accounts department, the customer order. So there should be 4 copies of customer order. Once the customer order is prepared, it will send it to the warehouse department and the accounts department and the customer also. So once the warehouse department receives the customer order, warehouse department or the dispatch department, once they receive this customer order, they will prepare goods dispatch note. What will they prepare? GDN, goods dispatch note. This goods dispatch note will also be in 4 copies. One with itself, one it will give it to the sales department, one it will give it to the customer, and one it will give it to the accounts department. Okay. So once customer order is given to the warehouse department, it will prepare goods dispatch note, and that will also be in 4 copies, and it will be given to everyone. We'll discuss more about it. So once goods dispatch note is prepared, it will make the delivery to the customer along with the goods dispatch note. Once the delivery is done, the accounts department, since it will also receive the goods dispatch note, right, a copy of goods dispatch note, the accounts department will then prepare the invoice. Okay. Quickly, just let us go through it again. If you know this system properly, how it works, your sales systems is very easy. Okay. So what is happening? First, customer order. First, customer order, right? Then the sales department will check the inventory. Once inventory is checked, it will prepare customer order. And that customer order, yeah, it has to send to all the other people. That will be in 4 copies. It will send it to even accounts department and the warehouse department. Once the warehouse department receives it, it prepares goods dispatch note, and that it will send to even the it will deliver the goods along with the goods dispatch note, and this goods dispatch note copy will also be sent to accounts department, and it will also be sent to the sales department. Now one question arises: why does the warehouse department or dispatch department have to send the invoice to the sales department? Why the warehouse department or dispatch department have to send the copy of goods dispatch note to the sales department? Type in your chat, message. Let me see. Why one copy of goods dispatch note should be sent to sales department? Why? Okay, customer it has to send because it's making delivery. It is sending to the accounts department because they are making invoice. But why this goods dispatch note should be sent to the sales department? Why? Yes. Very good, very good. So, to check if there is any unfulfilled orders, correct? To check if there is any unfulfilled orders. That's the reason even one copy of goods dispatch note should be sent. So that what the sales department can do, For example, now there will be customer order 1, customer order 2, customer order 3, customer order 4. Okay. Now there will be goods dispatch note 1, goods dispatch note 2, goods dispatch note 4. Okay. There is no goods dispatch note 3. Then what the sales department will do? He'll check, no? They'll check, okay, if it is done, okay, this customer satisfied. So customer order, this is satisfied. This is satisfied. So this customer order is not fulfilled, correct? So it will call up warehouse department or dispatch department and ask the status. Why this customer is not yet delivered? Why the goods are not yet delivered to customer number 3? Correct? Customer order number 3. Correct? So that is the reason the goods dispatch note copy should be sent to the sales department also, so that they can check if there is any missing orders or any unfulfilled orders. Done? Understood about the sales department? Now let us go quickly through the. So this was the direct theory question. What I was talking about the control objectives. For each system, there is control objectives, right? Just a second. Oh, 1 minute. Yeah. For each system, there is control objectives, right? So these are direct theory questions. Any 6 points you have to learn. They can ask you for any mark, 3 mark, 4 mark, 5 mark, or anything. Even for 2 marks sometimes, depending on the question. So these control objectives you have to study for each system. To ensure that orders are only accepted if goods are available to be processed for customers, correct? To ensure that all orders are recorded completely and accurately. To ensure that goods are not supplied to poor credit risk. Means you should not give to people who are not credit worthy. To ensure that goods are dispatched for all orders on a timely basis. To ensure that goods are dispatched correctly to customers and that they are of adequate quality. To ensure that the goods dispatched are correctly invoiced. So you have to complete the sentences. You just can't tell, okay, to ensure that all goods dispatched are correctly and correct. You have to complete all the sentences, okay? You have to write proper. So direct theory question means you either know the answer or you don't know the answer. You can't make up your own sentences, correct? You can use your own language for sure, but then try to use these words, ensure and all. We'll be learning more about it in coming this one. So to use this word, so for example, if you're writing to ensure that sales discounts are only provided to valid customers, to write the whole sentences. Don't write shortcuts and write good 6 points. Always impress the examiner, always evaluator. Okay, now let us see what are the sales systems deficiencies. You have identified there was no segregation of duty. That means only one person is doing all the thing. Correct? If you identify this, you have to write this as an explanation. There could be fraud or error because no check is done. You have to complete. You just can't write there could be fraud or error. You have to write because no check is done. No segregation of duty you identified. You will identify that you will write it in the first part. Correct? You will have columns, right? So first we'll put this no segregation of duty. Leave one space and write there could be risk. You're explaining that now. How will you explain? There could be fraud or error because no check is done. You have to complete the sentences. Done. You'll get 1 mark. Recommendation you can write. Next, manual edit of invoice. Manual edit of invoice. What will be the recommendation? There should be segregation of duty. That should be the recommendation, right? Means appoint other staff members, like that you will write. Don't write there should be segregation of duty. Write like that. There should be other staff members should be appointed so that there is less fraud or error. Now, manual edit of invoice. Is this a deficiency? Yes. If you are manually able to edit the invoice, what could be the deficiency? You understood from the question, you will identify this word, manual edit of invoice. That will be your identifying part. Explanation part, I'm telling you. You should write there could be error. Not only this, you have to write higher price could be charged, resulting in, if you're charging higher price, it will result in loss of customer goodwill. If lower price is charged, resulting in loss of revenue. Understanding? If manual edit of invoice, you have to write there could be error. Higher price could be charged, resulting in loss of customer goodwill. Lower price could be charged, resulting in loss of revenue. Done. You will get 1 mark. Okay. Next. Sales invoice raised immediately after receipt of order. Now, you know the system, right? Now, what is here? What they're doing? They're issuing invoice immediately after receipt of order. If you remember, first was order, then you have to dispatch it, right? And then that invoice will come. Before giving goods, how can you raise the invoice? There should be a proper format, right? So there is a deficiency again, because the customer will be not satisfied, right? There will be loss of customer goodwill. Why? Imagine you have not yet got your goods, okay, and you are receiving the invoice. You'll be like, goods abhi tak mila nahi hai, and you're asking the payment, correct? So always make the customer happy. So if delivery is late, loss of customer goodwill, correct? So if sales invoice raised immediately after receipt of order, you will find this in your case scenario, in your case study. So pick that point and write it as a deficiency, identifying deficiency point. Explanation will write, if delivery is late, loss of customer goodwill. Simple, 1 mark you got. Recommendations you have to write. Customer order not numerically sequenced. I'm just explaining you now this one in detail. Very important it is. If customer order is not numerically sequenced, this is a deficiency you identified from the scenario, case scenario, correct? Customer order should be numerically sequenced, right? Why it should be numerically sequenced? Explanation you're giving now. These 3 points you have to write. Only then you get 1 mark. Simple points it is. If customer orders are not numerically sequenced, it will be difficult to identify missing order. If you just write this point, first you have to write customer order not numerically sequenced, leave one space, then write down the explanation part. It will be difficult to identify missing order. Goods will not be delivered or delivered late, results in loss of customer goodwill. Hold on, let us understand. See, if customer orders are not numerically sequenced, means you don't know, if you're just randomly putting some customer orders, numbers, simply some numbers or something like that. Okay, XYZ or something like that. Okay, what will happen? It will be very difficult to identify missing orders, right? It will be very difficult to identify the missing orders. And if some order is missed, if you're missing on customer orders, what will happen? If you not receive the customer order only, how will you deliver the goods to them? So goods will not be delivered, or it will be delivered late. Correct? Remember this point. It will be difficult to identify missing orders. If missing orders are there, goods will not be delivered, or it will be delivered late, which will result in loss of customer goodwill. You get 1 mark like this. Correct? What are the recommendations? You will tell customer orders should be numerically sequenced. A sequence always, recommendations will be accompanied with one more point. One, you will tell that the customer order should be numerically sequenced. One more will tell a sequence check should be undertaken to identify missing order. Now, once you are sequentially numbering the customer orders, your job is not done. You should review that, right? A sequence check should be done. You should check that you have to check and identify missing orders. That was your purpose, right? Why were you sequencing customer orders numerically? So that you can check missing orders. So you have to write this point in your recommendation to get marks. Understanding? Next. Monthly statement not sent. Means monthly customer statements is not sent. What will happen? Errors and dispute will not be identified and resolved on a timely basis. This is your explanation part. This is your identify part. This 0.5 marks. This will get 0.5 marks. Simple. This is the way you have to explain. Reconciliations not done. If you're not doing reconciliations, this is your identify part. This is your internal control deficiency part. What will be the explanation? Error, it will result in error in receivable will not be identified timely. Error in receivable will not be identified timely. You will get full marks. What will be the recommendation? Monthly reconciliations should be done. Correct? And along with this, you have to write one point. That is, Review part you have to write. See, in this also recommendation, if you remember, you have written this, right? You have to check. In this, you have to review. Responsible officials should review this reconciliation and evidence the review. Very important points, and evidence the review. So responsible officials should review this reconciliation and evidence the review means there should be an evidence for this review that you have actually reviewed it. Okay, this is the recommendation you have to write. Next, receivable outstanding for a long period. From the case scenario, you will identify this deficiency that the receivable was outstanding for a longer period of time. So what is the explanation you will give? If receivable is outstanding for a longer period of time, there will be irrecoverable debt and cash flow issues. Very important point. Correct? अरे ये भी बराबर से नहीं बन रहा है. Cash flow issues. Okay, important point. Same goes for no credit controller. Who is a credit controller? Who is responsible for collecting the money from the creditors? Creditors means debtors. Debtors. So what will be the explanation? Same explanation. If there is no credit controller, irrecoverable debt, cash flow issues. थोड़ा sentence में बना के लिख लेना. But these words, what the evaluator wants: irrecoverable debt, cash flow issues. There will be cash flow issues. This will lead to irrecoverable debt, like this. Understood how you will get the points? Next, goods dispatch note, GDN. Who prepares GDN? The warehouse department, right? It is not forwarded to sales department. We already discussed this point, right? If it is not forwarded, so this is the identify part. From the case scenario, you will identify this. Okay, goods dispatch note was not forwarded to the sales department. Identify, you will get 0.5 marks. To write the explanation. What is the explanation? Sales department will not be able to identify orders are fulfilled. Correct? Sales department will not be able to identify if orders are fulfilled, result in loss of customer goodwill and future sales. This is the explanation part you have to write. What is the recommendation? Goods dispatch note should be forwarded to sales department. First thing, always tell them do this, and then accompany with one more point, that is review or check, whatever it is. So regular review of unmatched order should be done to identify unfulfilled orders. I explained you, right? Customer order 1, customer order 2, customer order 3. Then you had goods dispatch note 1, goods dispatch note 2, goods dispatch note 3, correct? So if you don't have, for example, this is not there, this goods dispatch note is not there. So this is called as unmatched order. I'm explaining you what is this. Regular review of unmatched order. This is an unmatched order because there was no goods dispatch note against it. Should be done to identify unfulfilled order. So once you got to know this is unfulfilled, this is unmatched order. That means this customer is not yet fulfilled. This customer order is not yet fulfilled. Correct? So these are the recommendations. This is the way you have to present your answer. Understanding? Next. Goods dispatch notes not sequentially numbered. The same thing. You remember this format? The same thing here we had. These 3 points. The same thing here. Here what was happening? It was not numerically sequenced. Here what is happening? Goods dispatch notes is not numerically sequenced. Their customer orders was not numerically sequenced. If goods dispatch notes are not numerically sequenced, what will happen? It will be difficult to identify missing GDNs. There what we wrote, it will be difficult to identify missing customer orders. Understanding? And if customer orders are missed, the customers will not be, the delivery will not be made to the customers, or late delivery will happen, which will result in loss of customer goodwill. Same here. If goods dispatch notes are missing, means it will be, if goods dispatch notes are not numerically sequenced, it will be difficult to identify. You have to use this word. It will be difficult to identify missing GDNs. If there are missing GDNs, if good dispatch notes are missing, then customer will not be invoiced, right? If good dispatch note is missing, customers will not be invoiced. If customers are not invoiced, it will result in what? Loss of revenue to the company. Correct? So be careful when to use loss of revenue, when to use loss of customer goodwill. Sales staff fix discount. If sales staff is fixing discount, what will be the error? This is the deficiency, right? Sales staff should not be fixing the discount. the responsible person should be fixing the discount. If sales staff charges high, means if he gives higher discount, if sales staff gives higher discount, what will happen? Loss of revenue. If sales staff give lower discount, what will happen? Loss of customer goodwill. This is the explanation part. If sales staff is fixing credit limit, sales staff is giving credit limit. How many credit limit? Actually, sales staff is not the person who should fix it, right? There should be responsible person. More credit limit. If sales staff, what will be the explanation for this? Identify. You have identified sales staff fixed credit limit. This is the identification part. What is the explanation part? If higher credit limit is given, there will be chance of what? Irrecoverable debts, right? If you're giving more credit limits, there will be a chance of irrecoverable debts. If lower credit limits, there will be loss of customer goodwill. Correct? What will be the recommendation? Credit limit should be fixed by responsible senior official. You have to attach it with one more point I told you, right? What will be that point? Review, check and all. So it should be reviewed regularly. Next, if temporary staff prepare invoice, means for some reason there was not, the permanent staff was not available. So you had appointed, the company had appointed temporary staff, and that temporary staff is preparing invoice. Okay, that is the control deficiency you identified from the case scenario. The temporary staff prepares invoice. What will be the explanation? There will be chances of error. First point you have to write, there will be chances of error. Then you'll write, if higher invoice price is charged, if the temporary staff member is pricing higher, then there will be loss of customer goodwill. If lower invoice price is charged, there will be loss of revenue. Correct? Understanding? Amendment done by sales clerk in master data file. Who is doing the amendment? Sales clerk. Sales clerk is a very initial level employee, right? Can he have an access or amend the master data file? No. Master data file is what? Wherein all the data will be there, where all the confidential data will be there, crucial data will be there, correct? So this is the internal control deficiency, right? If amendment is done by the sales clerk, so write the deficiency. For example, discount. He is amending discount. What is the explanation for this? There will be error, there could be chance of error, there could be chance of fraud, leading to resulting in unauthorized access. Fraud, simple it is. There could be fraud resulting in unauthorized access. You should just not write there will be fraud. You have to write resulting in unauthorized access. Then you write there could be fraud if discount, if you're inputting more discount, if you're giving more discount, if the sales clerk is, if it's typing more discount, if it's giving more discount, then what will happen? Loss of revenue. If less discount, if it's inputting less discount, loss of customer goodwill. What will be the recommendation? Only supervisors or above should have access to master data. Correct? First recommendation always from the deficiency. Then it should be attached with something else. That is that review point, if you remember. Exception report. What do you mean by exception report? What do you mean by exception report? Exception report means difference. Exception means what? Difference report. The exception report of changes should be generated and reviewed by a senior responsible official. I hope you're understanding how you have to frame sentences in internal control deficiencies. Understanding? Next, master data file accessed by sales clerk. Again, master data file is accessed by the sales clerk. Is he allowed? No. Only supervisors or above should access it. Now, what is he accessing it? Credit limit he is accessing it. So, if credit limit, again same, fraud case is same. If it can lead to fraud resulting in unauthorized access. If credit limit error, it can also lead to error, because if it's inputting more credit limit, it will result in irrecoverable debt. If lower credit limit is put, then loss of customer goodwill. Remember, don't write loss of revenue, okay? It is credit limit. You have to write irrecoverable debt and loss of customer goodwill. Understanding how to frame sentences for internal control deficiencies? Okay. So this is the way you have to understand. So what I said you, Internal control deficiencies, identify part. So these were all identify parts. These, whatever we discussed, no segregation of duties, manual edit of invoice, all those are identify part from the question. You'll identify from the case scenario, and then you'll explain. Recommendation, you have to write one point, means you have to write 2 recommendations. Always 0.5 marks, 0.5 marks. Okay. Test of control, wherever they're asking us. Test of control, I told you the meaning, right? Test of control means what? Once you've given the recommendation, whether they are implementing that recommendation or not. That are test of controls. 1.1 mark. Report, two marks. That report, what standard format I showed you, right? By heart that. Same to same have to write down. 2 marks will easily score. And there'll be some direct questions like control objectives, which will come. Then we'll take a short break of 5 minutes, and I'll just explain you that purchase system, some points. I'll just explain the purchase system that this way I'll explain you the purchase system. And then we'll move on to audit risk case scenarios. Okay, done. Okay. Is the audio video clear? Come back, let's start. Let us start. Okay, let us start. Now we'll just quickly discuss about the purchase department once. Then we'll move on to audit risk case scenarios. There'll be production department. There'll be production department. Okay, manufacturing department. They will require some materials, right? So they'll request material requisition note. They'll give this note to warehouse department who is having inventory, who is having that raw materials and all. So production department will, if they want raw materials, what they'll do, they will request this note, that is material requisition note, and they'll give this note to the warehouse department. What the warehouse department will do, if they doesn't have those stock, if it doesn't have that material in stock, what they'll do, they'll give this note, that is purchase acquisition note, to purchasing or ordering department. What they'll do, they'll give this note to purchasing or ordering department. When this purchase acquisition note will be done, when there is no raw material or the raw material has reached this reorder level. Okay, leave that. So production department will send material requisition note to warehouse department. If warehouse department will send purchase acquisition note to purchasing or ordering department. Once purchase acquisition note is received by purchase or ordering department, it will make a purchase order. It will create a purchase order, and this purchase order will be sent to the approved supplier, whoever is the supplier. And then the supplier will make the delivery of these goods to the warehouse department and will send the purchase invoice to the accounts department. Okay. Once the warehouse goods are, once the goods is received with the warehouse department, it will send the raw material. It will send this to the, it will give this to the production department, the raw material. It will give the goods to the production department, and it will create one copy called as goods receipt note. In sales, what we had, goods dispatch note. Here we'll have goods receipt note. Now, purchase order will have 4 copies in total. One, it will keep it with itself. One, it will give it to the supplier. One, it will give it to the warehouse department. One, it will give it to the accounts department. 4 copies of purchase order. 3 copies of goods receipt note. One, it will keep it itself. One, it will give it to the goods accounts department, that we have received the goods, so that they can make the payment, right? Accounts department will make the payment. And then one more, it will give it to the purchasing or ordering department, so that they can check whether they're actually received or not. Correct? This is your purchase department. Purchase, how it works. Okay. Now, based on this, the same criteria how we studied for sales, no, we have deficiencies for these also. So through questions, now you understood how you have to write the sentences, framing the sentences. You do that. Now let's quickly move on to audit risk. Audit risk case scenarios. Okay. Now, audit risk case scenarios. Again, they'll ask you particularly, right, to write 6 audit risks, 6, 7, 8, anything they can ask. Correct? There's a particular format of writing it. Explanation and identification, same. It will carry how much marks? 0.5, 0.5. That is 1 mark. And auditor's response will carry 1 mark. Correct? Each will carry 1 mark. In auditor's response, you have to write 2 points. How many points? 2 points, 2 good points. How many points? 2 good points you have to write. Explanation and identify. Now, how there is a format of writing these answers. Explanation and identify. What will you write in that? You have to mention what? Something called as assertion. What will you mention? Assertion. Then you will mention understatement or overstatement. What will mention? Understatement or overstatement. And if there is risk, you have to mention that. In every audit risk case scenario, you will not have risk. Means in every point there will not be risk. Wherever applicable, if it is applicable, you have to mention that point, risk point. Risk means what? We studied, no? Inherent risk, control risk, detection risk. These points, if it is applicable to that point, you have to mention that point to get that 1 mark. So in explanation and identification, you have to write in these 3 points: assertions, understatement, overstatement, and the risk part. Risk only if applicable. Okay. Next, in auditor's response, how will you write? You have to write 2 points, correct? That also there is criteria. In this also there is criteria. You have to write audit procedures. What will you write? Audit procedures. Then you will write how are you doing it. Then you'll write why. Why point, very, very important. Okay. So in both there should be 3 points. In this 2 minimum, means in this 2 more points are fixed. Assertion should be there and understatement or overstatement should be there. Risk wherever applicable. In auditor's response part, 3 points. Your answer should have 3 points. 3 points means you have to write 2 points. In these 2 points, the framing of structure should have these 3 criteria. One is audit procedure, one is how will you do it, and one is why are you doing it. Understanding? Okay, understanding? Okay, I'll give a small example for this. Very simple example I'll give you. How will you have to write it? What is the audit procedure? For example, review. What will write? Review. How will you review? Review bank statement. Just don't finish that review bank statement. You'll not get marks. Why are you doing it? To confirm whether cash is received or not. Just an example I'm giving you. So this is the way you have to frame your sentences in auditor's response. 3 parts. What is the audit procedure? Review, ascertain, all those words you have to use. How are you doing it? Financial statements, bank statements, whatever documents, what documents are using? That is, how are you doing it? Why part is very important. You just don't write review bank statement, review financial statements, a certain cost. Why? To determine, to ascertain. Okay. So for example, review bank statements to confirm that the cash has been received. Give me a minute. Okay, audible? Yeah. So this is how you have to write your audit risk scenarios. Let me give you some examples, okay, of how we'll show. Take the first one. Let us see the first one now. From the case scenario, identified this, that the company has purchased non-current assets or has incurred refurbishment cost. Let us take one simple example, wait, so that you are understanding well. Okay, let us take this example. Simple so that you're understanding properly. Okay, this risk example, let us take. Let us take some risk examples. So all three are covered in that. Inventory held at different warehouses. Inventory held at different warehouses. You identify there is a risk, right? Because everywhere you won't be able to go and check, right? If there are so many warehouses, different warehouses, if inventory is held at different warehouses, you'll be able to attend only at one or two places, correct? So there is a risk. Audit risk is there. So you identified inventory held at different warehouses, correct? Now, how will you write it? What is identify part is done. Explanation part, what I said, assertions. What assertions are affected? Existence. How will you check the existence when the inventory is held at different warehouses? You'll not be able to go there, right? So existence assertion is affected, and the completeness, whether you'll not know whether the inventory is recorded completely or not. So, and what risk it will lead to? Detection risk, correct? So auditor will not be able to attend at all inventory counts, increasing detection risk, and therefore they need to ensure that they obtain sufficient evidence over the inventory counting controls. And completeness and existence of inventory for any warehouses not visited. You don't have to write this. This is the language, but you have to not, you can write it on your own words. But these red points are there, no? That should be there in your sentences. And the essence of the point should be the same. Correct? So you will write, okay, otherwise it will result in overvaluation of PPE. Okay. Some of the warehouses may be owned by company and some rented from third parties. Only this is based on the scenario. Okay, if you find something like that, I'm just giving you examples. Some of the warehouses may be owned by company and some rented from third parties. Only warehouses owned by the company should be included within the PPE, correct? Only the warehouses which are owned by the company, only that will be formed part of PPE. This is the risk. Otherwise, it will result in, if you included that in PPE, if you are not owning that warehouse and you have included that in PPE, then what will happen? There will be overvaluation of PPE, understatement of rental expenses, because you are shown at PPE, understatement of rental expenses. If company has capitalized all warehouses. One more thing I have to clear. Tell me, if I am not recording something as expense and I'm recording something as an asset, means it should have been recorded as an expense, but I've recorded it as an asset. So three things you should comment on always, correct? If you've not recorded an asset, if you've not recorded expenses, what will happen? Understatement of expenses, correct? If expenses and profit are having direct or indirect relationship, you tell me. Expenses and profit are directly related or inversely related, you tell me. Expenses and profit dash incomes and profit, tell me. Expenses and profit are yes. Expenses and profit are inversely related, always remember, inversely related, and incomes and profit are directly related. That means if you're not recorded any expenses, your profit will be overstated. Understatement of expenses, overstatement of profit. And if not, and if you recorded something as an expense, you haven't recorded something as an expense, but have recorded something as an asset. You have done it ulta. Understatement of expenses, overstatement of assets. So overstatement of assets, understatement of expenses, overstatement of profit. Expenses and profit are having inverse relationship. If there was something called income side and liability side and profit, it would have been understatement of income, understatement of profit, overstatement of liability. Understanding? Don't by heart this. I'm telling you, concept should be clear. Okay. Okay. Goods in transit. Goods in transit. At the year end, there is a risk that The cutoff of inventory, purchases, and payables may not be accurate and may be under or overstated. Seeing how you have to write the language as? This is the audit risk. What will happen? You have used the word cutoff. Cutoff is a assertion, right? And here you have used understatement or overstated because you can't tell particularly what will happen. It might be understated or overstated. If the goods are in transit, the cutoff of inventory, purchases, and payables may be accurate, may not be accurate, and may be under or overstated. What is the auditor's response? The audit team should undertake detailed cutoff testing of purchases of goods at the year end. You have to use this word review last goods received note and the first good received note. Why? See, review is the audit procedure. What you're reviewing? Goods receipts note. Why? To ensure that cutoff is complete and accurate. Understanding how you have complete the sentences. If you just write review last GRN of the current year and first GRN, you'll not get full marks. You'll not get marks. We have to write this why part, very important, to ensure. Understanding? See here. Inspect audit procedure to confirm cost. Inspect production records to confirm the percentage of completion of WIP. Understanding the essence why I'm telling you. See, review post year end cash receipts to confirm recoverability. These 3 points should be there. Audit procedures, how means which document, and why, to confirm, to review, to ascertain, all that points. See, review allowances for irrecoverable debts are reasonable. Why means reasonable. Understanding how you have to complete the sentences for auditor's response. Perform more substantive procedures with respect to assets. If you just write perform more substantive procedures with respect to what? And one more thing, remember. One more thing. Your points should never be general or generic. Means if you just write generic points, you'll not get marks. You have to connect it with the case study. Always connect your points to case studies wherever possible. Not all points I'm telling. Wherever possible, connect your points to the case studies. Okay? Understanding? Connect your points to case studies always. If there's some amounts, figures and all, make use of that. And write that connection point with the case studies wherever possible, not all points. Even in substantive procedures, even in internal control, even in this one. Audit risk case scenarios. Okay. This is how will you present case scenarios. See, first one, if you see, classified is an assertion, understatement of non-current assets, understatement of profits. Review, breakdown of this cost. Why? To ascertain the split of capital and revenue expenditure. Understand the points? Review financial statements. Why? To confirm it is classified as non-current assets. Many students forget to write this to ascertain, to confirm. They just put review a breakdown of this cost. Will not get marks. This is very important. Inspect loan agreements to confirm it is a long-term loan. Review bank account to confirm the loan has been received. I'm just giving you some instances. Review financial statements to confirm the split between current and non-current liabilities. Review disclosures to ensure compliance with relevant accounting standards. Getting how you have to frame your sentences? Okay. Now, the last part, substantive procedures. Take a break of 5 minutes and we'll continue. Refresh, we'll finish substantive procedures and we'll end the session. And if you have any doubts, you sit with me, and after substantive procedures, I'll discuss section B, how you have to attempt. Okay, and then we'll wind up the class. And any doubts, sit after the class, we'll discuss. Okay, take a 5 minutes break. Shall we start and finish it? Is the audio video clear? Okay. Substantive procedures. One common doubt I get is, ma'am, if you are writing exactly same, will we get marks or not? Correct, no? If you're beheading and writing, will we get marks or not? It is just that if you are able to relate to the case study and whatever points are relevant with the case study. If you're writing only those points, you'll 100% get marks. Link it to the case study. For example, if they're asking, if they're told in the case scenario that new asset was purchased, okay, and you're putting some disposal point or something, it is not linking, right? So that is called rote learning, means you have not studied it properly, means you by hearted it. Then they'll just deduct marks. You have to see what exactly, see, there will be so many points, right? You have to write accordingly only 5 points or something. What is relevant to the case study, write those points. Okay, you will 100% get marks. No problem in that. And again, same what we discussed in audit procedures, in audit risk case scenarios, same thing you have to follow in this also. Write the audit procedures, write how, and write why. This part, why part, very important. Okay, very important. See, for example, inspect, it became an audit procedure. Capital expenditure budgets for the next financial, that became how. See this, to assess the appropriateness of the useful economic lives in the light of this. To replace assets. Understanding why part is very important. If you just write inspect the capital expenditure budgets for the next few years, that is a substantive procedure for sure. But why part, many people are missing. Many students are missing that. Recalculate the depreciation for a sample of assets. Why? To verify. Use these words. To assess, to verify, arithmetical accuracy. Correct? Recalculate, inspect, review, compare, perform. All these are audit procedures. Understanding? Don't write check. Very local language, right? Use good words. Good words. And write best 5 points always. 5 or 6 points you're gonna write best points always. Depending on marks. If it is for 6 marks, 6 points, 5 marks, 5 points. But write best points, wherein you know everything is covered. Correct? All these means all these 3 parts is covered. Audit procedures, how and why. All these 3 parts are covered. See, inspect financial statements. Disclosure of the display, whatever the explanation according to the case scenario. To ensure, not this, to ensure consistency. See, consistency, accuracy. Recalculate the depreciation charge for this one to ensure. This is the why part. What are you doing? Depreciation charge, you're recalculating it. Correct? So what are these procedures? Recalculations, review and all. You're making these procedures. On what basis you have to do that? And then why part you have to write down. Write these words: ensure, assess, verify, review. To assess. I'm telling you how will you get marks. So only pick up such points wherein you're getting all these. See, 1 or 2 points, they'll not be like everything, every point, it's not necessary every point will have. See, compare depreciation rates to assess reasonableness. Perform total calculation of this one. See, in this last point, there was no why part, right? See, perform a proof in total calculation for the depreciation charge for each category of assets, this one with management, if significant fluctuation arise. Correct, no? It's not necessary every point will have it, but majority of your points should have these criteria. Majority of the points should have these criteria. So only I'm telling you, always whenever you're writing substantive procedures, choose such points wherein you're identifying that, okay, this point is very complete. Choose that points and write. Got it? These are your substantive procedures part. How you have to write it, I'm telling you. Everywhere you will find like that only. And wherever there are assertions, in everywhere there will not be assertions, right? In this point, there were no assertions. There were majority like disclosure. Disclosure is an assertion, right? Majority, you'll not find assertions everywhere. And wherever assertions are there, you have to write the assertions part also. Okay? See, for example, 1 minute. See here, for example, non-current assets. There are assertions in this. Verify completeness. They see, verify completeness, verify existence, verify complete. So wherever assertions are there, to ensure arithmetical accuracy, accuracy also in assertion, right? Valuation. Completeness. So wherever assertions also are involved, you have to mark that, you have to write that assertions also. Correct? Audit procedure, how are you doing it? Why are you doing it? And why means simply don't write in your own language. You have to write why, proper, to assess, to review, to ascertain, all that you have to use. And wherever assertions are there, you have to write that word. Inspect, assess for condition and usage to identify signs of impairment, verifying valuation. Understanding? So from my part, I'm done with. Any doubt? Now let us discuss section B. How will you attempt it? Okay. Section B. 30 marks, 20 marks, 20 marks. Correct? Where is the calculator? What I said, section A, you have to complete within 30 to 35 minutes maximum. And pro tip was, along with whenever you're stuck in any MCQ, don't waste a lot of time in that. Whatever answer is coming to your mind, whatever you think is right according to you at that moment, mark that, tick that answer and flag that question. Correct? Next, section B. First thing again, very important, 100 marks paper you have to attempt. 100 marks you have to attempt anyhow. Only then you'll be able to pass. Very important criteria. And 100 marks attempt you have to attempt. And everyone will have different domain in expertise, right? Different part will be good at, right? Some are comfortable with audit risk. Some are comfortable with internal controls. Some are comfortable with substantive procedures. Correct? Whichever part you are comfortable with, whichever part you are comfortable with, whichever part you think you are good at, because every student will have different part comfortable, means they are good at different parts. So I can't tell you attempt this part, attempt this first. When you are given your mock, you would have analyzed, right? Or when you're studying also, you're feeling some part easy, you're feeling any of these three, whichever part you're feeling easy. For example, for you, substantive procedures are easy, write that first. Internal controls are easy, then write down that. Audit risk is easy, then write down this. Depending on whatever you're comfortable with, attempt that questions first. Direct theory questions. You know about direct theory questions, right? Like three conditions to audit, safeguards and all. All those, when those questions comes, you should not waste more time on that, because it is either you know or you don't know. Correct? You just can't write some random points. You have to attempt, obviously you have to attempt, but you should not spend more time on that. You should be very thorough with those direct theory questions. Correct? Whatever marks it is, for example, 5 marks, write 5 points and you're done with it. And you will get good marks. And write, always I tell you, write good points. Always write good points. Good points means whichever has more value, whichever is more worth, which will impress your examiner. Correct? So write those points so that you're not leaving any gap, you're not leaving any corner for deducting marks. And always write relevant points. Even in case scenarios, I'm telling you, write your relevant points. Link it with the case. If you just directly, okay, you have see, normally students by heart, right? Substantive procedures, you learn it. Normally everyone learn it. You'll understand concepts, but again you'll have to learn it. Correct? When you're learning and you're just writing in the exam directly the points, you'll not get marks, full marks. Read the case scenario once, at least once read the case scenario and see what exactly are points relevant. And then choose those 5 points from so many points. You will have so many points, right? In your book, whichever book you're referring will be having so many points, right? Out of that, read the case scenario quickly once and see which all are relevant for you. Only those points you pick and write on those 5 points, good points, 5, 6 points, depending on the marks. So 30, 20, 20 marks, right? So I told you direct theory questions, if it comes from 5 marks, you should not spend more than 6 to 7 minutes for this. Actually, you should 5 to 7 minutes maximum it is. 5 to 7 minutes for these direct theory questions. For case scenarios, give more time, because there you will require your brains, right? You have to read the case scenario, you have to frame sentences, you have to know what you have to type. Correct? So give more time to these for these case scenarios. Give less time to these direct theory questions. That is the way you will complete your paper fast. and write how much is required. Don't write extra points. 1 point extra is okay. 1 point extra is okay. For one question, if you know 10 points, and if it is for 6 marks, writing 7 points, okay. 6 points, if you're sure that 6 points I'm gonna get 6 marks, write 6 points only. Stop there. If you have time later on, come and write one point extra. Don't write more point extra. 6 points for 6 marks, 7 points is enough. Good points. Then for case scenarios for risk and all, don't write extra, okay? For risks and all, you'll not have time also. For example, they've asked you audit risk, write down 7 audit risk. For 14 marks, they'll ask you, right? Correct? Don't write extra 8. Actually, in the question in case scenario, there will be actually more than 7 risks only. There'll be 9 or 10 or 11 risks. Correct? There'll be more risks only. But you have to choose which best risk you can present to them. Correct? Choose that and start writing that. And always start with good points. Means start with whichever you know perfectly. So that that is fast also. Correct? Those points are fast also. And then if you don't know something, at least attempt it. Don't leave it. Correct? If you don't know something, attempt it, don't leave it. Because there will be 10 to 15 marks in every exam wherein you will be confused, you don't know, or you're not remembering that points. So just because of that 10 to 15 marks, or you even take 20 to 25 marks at a higher point, just because of that 20 to 25 marks, don't let this impact your 60, 70 marks. Correct? Because 60, 70 marks is always scoring and manageable. Because that is what you're studying for, right? That extra marks is for your hard work, your analytical brains. But that 60 to 70 marks paper will always be manageable. So don't be nervous in your exam or blank out because of by seeing only those 20 marks questions wherein you're not able to answer. Calm down. Take a deep breath. Hold on yourself. Leave that question for that moment. Don't do like MCQ what I told. Okay, whatever you're knowing, at least write that. That you should not do for section B. Okay. For section A, tick that answer then and there and flag it. But for section B, if you don't know that answer, don't sit and time waste and don't write that answer now. Write whatever you know first. And then come back to those answers which are not written it. Okay, for section B, don't write that answer then and there. If you don't know, leave and write. Next point you write down. Okay. And the last 5 minutes, you should always spend to check whether you have written everything or not. You've checked properly, some spelling mistakes, and always try this bold point for highlighting your points. Like I'll give you one example. See, in my case, I've written this, right? I've done this. If you see this, I've highlighted these points. So don't use colors, okay? Use bold. You bold is classified. You bold these points, understatement of non-current assets. Bold this point. Bold understatement of profits. Understand it, it becomes easier for the evaluation to evaluate. But if you are slow in typing, if you know you will not be able to complete the paper, don't do this mistake of highlighting it. If you are slow, if you know you will not be able to complete, then don't go for that, because that will again consume time. Because your first priority should be completing the paper. But then if you have practiced well from the beginning, if you have typed from the beginning, if you have done this homework, like all this, from 1 month you're practicing, you have given good marks, then always do this, bold. Instead of writing in red, I'm telling you, you have to bold these words. Review, bold these words. Review these words. Bold these, whatever you think will get you marks, bold. Don't sit and bold everything, okay? Don't bold everything. Only words you have to bold, like only disclosure, omitted. Don't only bold understatement. You have to bold what it is. Understatement of finance cost, overstated profit. Okay, that is you have to bold. So for example, this is the answer you have written. This is a very big answer. Don't have to write, for example, the second point you're not writing. I'm just telling you for example. Okay, leave that. For example, there were 4 points in this, but you have to write only two good points, right? Write 2 good points, and you have to bold that, inspect, confirm. That's it. Understanding? This is the way you have to present to get good marks. Okay, this is what it is. and keep a track of time always. For example, 45 into 3, 135. Your 180 marks paper, right? Your paper is for 180 marks, right? Out of this 180 marks, leave 5, so 5 marks, I'm telling, 180 minutes. Your paper is for 180 minutes. Time allotted 180 minutes. 5 marks to leave, buffer. Plus 10 marks to leave. Total 15 marks to leave as buffer. So 180 minus 15 marks is how much? You have total 165 minutes. Out of that, you're giving 35 minutes to what? Your MCQs. 35 minutes to your MCQs. So you have remaining 130 to 135 minutes. Correct? So 135 if I take divided by 3 questions. So every question you can allot 45 minutes. And we have kept that buffer, right? That 30 marks, you have to write that big question, right? 30 marks. That you allot 45 minutes plus 45 minutes is how much? 90 minutes. Ninety plus 35 is 125 minus 180, 55 minutes. So one question you have to allot whichever you know best, 40 minutes. First, you'll choose the best question, leave all this. Now I'll tell you the conclusion, what you have to do. You will choose first case scenario, whichever you're best at, right? Whichever you're good at, that you spend 40 minutes. How many minutes? 40 minutes. Maximum you go up to 45 minutes. Maximum. Minimum I'm telling, try to finish it within 40 minutes. The second, whatever case scenario you're taking, go it for 45 minutes. This is for 20 marks, I'm telling, 20 marks question. For 30 marks question, you can take 50 to 55 minutes. Okay? And your section A, 30 to 35 minutes. You'll easily be able to cover your answers. Plus, you'll have some buffer also. 10 minutes buffer also you'll have. To just go through again, or 5 minutes, 5 or 10 minutes buffer you'll have. To go through your answers again, or wherever you were stuck. So always remember, if you are stuck at any point, leave that then and there and move to the next point. In section B, I'm telling. Section A, mark that answer, flag it, move to the next one. Done? Any doubts? After this session, I'm just stopping this session. From my side, I've given you all the inputs because there's no point in sitting and reading these points now. In revision class, I'll not be able to cover all the points. Correct? I've just showed you, taking one example, how you have to present it. Okay? You can, from the case scenarios, you can copy paste that identify part. But don't write it such big part that you're copy pasting a very big sentence. Make it crisp. Copy paste you can do, but make it crisp, and whatever is required, only that you should keep it. Okay? Done? All the best for your exams, and don't worry, you'll ace it. Attempt 100 marks paper. Okay? All the best. Bye-bye.